Once again, good morning, everyone. And as you've noticed, we have been joined by the people we were waiting for. And so we thank you, our chief guest and also our host, in order that is the Cabinet Secretary of the Treasury and the Governor of the Central Bank of Kenya. We also have quite a number of people scattered all around the room who have been involved with this process. We do know we've got quite a number of chief executive officers. We know we are joined by members of the Monetary Policy Committee. I see other people who I shall recognize as the program and the day goes on. But to all of you, we do know you're VIP, so welcome. Feel welcome, feel warm. It's a very cool day in Nairobi, and we are thankful for the signs of rain that we've seen from this morning. For those of you joining us from online, from other places on the internet, also feel welcome. We do know you have been with us all the way from the beginning of the week since this conference started. And it's been a very interesting set of presentations, discussions. If you've followed any of these, you've seen those happening in person, but also through the chat functions of the various online platforms you've been on. And you're thankful for being so involved in this process. So today is the last day of the conference, but as is usual with conferences like this, the last day is the best. And so we have been looking forward to it quite a bit. So the first thing that we're going to do, and it will give me a great deal of pleasure to do, is to introduce someone who's been very involved with this, although she is not physically here, but I think in this day and age, whether you're physically here or not is no difference, you're all together. And so that person who I'll introduce is Professor Tavneet Suri. Professor Tavneet Suri is a professor at MIT, that's a Massachusetts Institute of Technology, but she is as Kenyan as they come. Oh, there's Tavneet. Tavneet, I hope you're not in your bedroom. Tavneet is in our office in the middle of the night. So I'll ask our technical people to please put her sound up. I notice she's probably trying to come in. And I want to hand over the program briefly to Tavneet, who will tell us why I'm handing over this program to her. So Professor Tavneet Suri, over to you.
Thanks so much. Wallace, can you hear me okay there?
We can hear you perfectly.
Awesome, great, thanks. Good morning, everyone. It's actually morning for me too, just a different time of the morning. And welcome to everybody who's there. I think Wallace did a great welcome, so I won't do that again. Let me start off by sort of talking a little bit why I'm here this morning. You know, the teams at FSD Kenya, the Central Bank of Kenya, and KNBS over the last many years have been producing these really amazing data sets called FinAccess. They've been a fantastic and absolutely crucial investment in our understanding of financial inclusion in Kenya. They've not only collected these data, but they've made them public to researchers to use. In the space of financial inclusion, as you all know, Kenya has been somewhat of a global success story driven by the take-up of M-Pesa. And this has meant the FinAccess datasets are not just a resource for us to bring evidence to policy in Kenya, but they also have an impact on policy across the whole developing world. What we learn in Kenya is being watched by researchers and policymakers across the world. I personally have worked with the FinAccess datasets myself and have built papers and part of my career off of them. So I'm really grateful they're around. In the launch of the last FinAccess, which happened last year, FinAccess 2021-2022, you know, the FSD team, the CBK team, and myself got together at the encouragement of the governor to try and build a competition on financial inclusion research. And so we designed a call for papers that would ask, you know, students, faculty across the world, in Kenya especially, to write papers and submit them to us for this competition. And so over the course of this year, this competition has been running. I've had the great honor of participating with the CBK and FSD and KNBS teams on this. We read papers. We had about 11 submissions, 10 actually from Kenya, from students and faculty in Kenya, one international. And we read and reviewed the papers. We discussed them. We sort of chose 4 to be presented at a research conference at the University of Nairobi, which happened earlier this week on Tuesday. And then we kind of picked the winners of this competition. And so my job today is both to give you this introduction to the competition that's been running for a while, to talk about why we did this, and now to sort of announce the winners of this competition after all of our reviewing and presentations, etc. So Wallace, are we good to go? Can I start that?
Tavneet, yes. So how we will do it is so I'll ask the person who will award the award to come forward from our chief guests, and then you'll award the winner. So if you're ready,
I am ready.
Excellent.
I've been waiting for this. I think we all have.
Excellent. Good. So I will begin with Tamara Cook. Tamara, if you just come here. No, come up here. I think it's easier if you come up. So there, Tavneet, over to you to announce the winner.
Great. So I'm going to announce the second runner-up for this competition. It's June Bhutia. The title of the paper is Financial Health in Kenya, Beyond Financial Inclusion.
A big round of applause. And for this one, I will ask a volunteer to come up because she's online, the second runner-up. So let me pick someone who is going to receive this on their behalf. Felisa, come up. Pretend you wrote a good paper. So a big round of applause for Junwinex Mbuthia. Congratulations for being the second runner-up. Tavneet, back to you.
Great, thanks, Wallace. June, congratulations from all of us. You wrote a really lovely paper. We really enjoyed your presentation on Tuesday. Let me go on to the first runner-up.
Okay, and for that, I will ask the governor to please come up on stage.
Hello, Tavneet. Hello, Tavneet.
Hi, Governor.
Good to see you.
It's good to see you too, sir.
Tavneet, over to you.
Great. The first runner-up, I was about to try and do the wrong one, is Davis Bundin Twiga. The paper is called Financial Health and Nexus with Digital Financial Services, Deconstructing the Gender Gap.
Bundi, I see you coming with a lot of excitement. Look a bit excited. Thank you, Bundi. Thank you, Governor. I will now ask the Honorable CS to please come up. Buenos CS.
Hi, Tavneet. Can you see me?
Hi, Professor. Yes, I can. How are you, sir?
Thank you. Thank you. Nice to see you.
You too, sir.
Okay.
Tavneet, over to you.
Everyone, I'm sad I'm not there in person. Okay, so the winner of this whole thing, after all of this, let me announce them. It's Dixon Wandera and Kefa Simiyu, explaining gambling behavior amongst the youth in Kenya.
Wandera and Simiyu, are you in the room? There you go. The winner should have a bit of excitement. And we'll ask you to stay on stage because Tavneet, do you want to announce the nice surprise that comes in addition to the certificate?
Sure. Can I take 1 second just to congratulate Bundi and both Wandeda and Simiyu just for their wonderful papers. Like I said, we really enjoyed reading them and seeing them presented. For the winners, the nice surprise that Wallace is talking about is a cash prize. Do you want me to announce how much, Wallace, as well?
It is written very loudly, but CS, if you could do us the honors, it's
Yes.
a check for $1,000.
There we go. There's the extra surprise.
Which comes at the exact right time because it's just before Christmas.
Yes.
So we hope that in good tradition, it will be converted into goats and chicken. But congratulations for that. And Tavneet, again, back over to you in case you want to say a few last words.
Great, thank you.
Yes. Thank you. Thank you, CS. Thank you both.
Awesome. Thank you so much. Yeah, I just wanted to say a couple more things. You know, I wanted to just thank everybody who submitted a paper, even if they didn't make it to the final three. Like I said, we got, you know, the aim of this competition was to encourage more work using the FinAccess data sets, and we accomplished that very clearly. We're also all hoping there'll be more to come. This was the first time we held the competition. So we've learned a lot about how to run the competition even better next time. So there will be a next time. And I encourage all of the researchers out there watching today or listening today or in person there today with us to keep an eye out for it. Wallace, I'll hand back to you. A big thanks, one other thanks to all the CBK, FSD, and KNBS teams who worked together. Really enjoyed working with them. Thank you.
Thank you very much. And a big round of applause, not just to the winners, but also to Professor Tavneet Suri, who has been central, as she's explained, in doing this. Obviously, when you get papers of this kind, you have to evaluate them on very many criteria. And I think she's done a great job, and so is the team that she's been with. So a big round of applause so she can hear us all the way across the internet. Asante Sana. Now, you've been here listening to the proceedings of this conference, and so you do know that a core part of it has been breaking down the statistics into the different counties. So we were expecting a representative from the Council of Governors. I'm not sure that they're here. So we were expecting a representative from the Council of Governors, but we are made aware that they may not necessarily be here. So I'll jump straight to our host and someone who's been very, very keenly behind this, pushing it in all sorts of different ways, as Tavneet explained, and I think you've heard through the week. This is the Governor of the Central Bank of Kenya, Dr. Patrick Njoroge. Governor?
Confirming our rules there, what I'm doing and what I'm not doing. But Professor Njuguna Ndung'u, a very good friend, and now the Cabinet Secretary of the National Treasury. Congratulations, and great to have you back here. Great to have you back here. And of course, we have colleagues from KNBS, and Donna Doboto, the DG isn't here, but we have a representative. Tamara Cook, a friend, researcher, and I guess a pusher as well. You've done very well with your team. Professor Tavneet Suri, who we just saw on the screen there, we presume she's still watching this, wherever she is. Abil Olaka, the CEO of Kenya Bankers Association. Other CEOs present, policymakers, friends, researchers, good morning to you all. I actually see some people who are in the fintech world also here, which is excellent. So good morning to you all. It is a pleasure to host you this morning on the last day of the 4-day Financial Inclusion Statistics Conference. As you know, the conference opened with a seminar at the University of Nairobi for graduate students from all universities. The seminar showcased the successful research papers on financial inclusion following a competition that saw 11 papers or 11 students submit their papers. The best paper, following rigorous reviews, has been selected, and we have now just witnessed the three top papers, and congratulations to all of you who participated, and of course much more to those that won the competition. I want to again thank Professor Tavneet Suri and colleagues at FSD Kenya, KNBS, and CBK for making all that possible. I also want to express my gratitude to you, Cabinet Secretary, for accepting our invitation to be the chief guest today to officially launch the first FinAccess Household Survey County Report. So the stress there is county report. This is a milestone in the history of financial inclusion measurement in Kenya, whose initial steps date back to 2006. Indeed, the CS is a champion of financial inclusion, and his contribution to furthering an inclusive financial ecosystem in Kenya and beyond is evident. Let me give a brief background for the benefit of those interacting for the first time with the work on financial inclusion. The Central Bank of Kenya, in collaboration with KNBS, that's the Kenya National Bureau of Statistics, and Financial Sector Deepening Kenya, FSD Kenya, has been conducting financial inclusion household surveys, otherwise known as FinAccess household surveys, every 2 or 3 years since 2006. The objective is to measure the trends and dynamics in the financial inclusion ecosystem, reflecting technological innovations, changing demographics and consumer behavior, policy changes, and even economic shocks to consumers. The indicators used are assessed along the access, usage, quality, and impact dimensions of financial inclusion and how these affect the lives and well-being of Kenyans. The 2021 FinAccess survey, for the first time, measured these indicators across all 47 counties, thus bringing out uniqueness and challenges affecting different counties. The report also focused more on the quality of financial services and products by providers, as well as the impact on or welfare derived from using such services and products. Measurement of the latter dimension has raised policy discussion on the relationship between financial inclusion, financial health, and financial consumer protection, each proxied by a composite index. I'm happy to note that this conference has attempted to disentangle these concepts and therefore provide policy responses to some of the long-standing questions. The top-line findings from these surveys continue to provide opportunities for policymakers and researchers to extract value from these survey data sets. It's against this background that CBK, KNBS, and FSD Kenya launched a series of activities to promote financial inclusion objectives. This included deep dive studies in 7 thematic areas, tracker surveys on micro, small, and medium-sized enterprises, FinAccess survey county report, and the financial inclusion in Kenya research paper competition. This is a testament that a lot of work is going on in this area. The 3 partner institutions, CBK, KNBS, and FSD Kenya, have pushed hard to generate value from the FinAccess survey dataset, not only with respect to policy, but also identifying opportunities for private sector players to to provide suitable financial services and products. Following the 2021 Finaccess Household Survey, the top-line findings were published in December 2021, which ushered in public discourse on various policy questions. This is very good. In February 2022, the three partner institutions sought experienced researchers to conduct FinAccess deep dives. Over the last 3 days, the commissioned local and international researchers have presented their high-quality research outputs. These papers have very rich policy and other proposals touching on role of digital finance, financial health of users, financial consumer protection, green finance, and the gender question in financial inclusion. I urge you all to take time and read these studies as they provide very useful information on current topical issues. By the way, I'm particularly, I noted that there are about 120 people in the room now, but actually in the course of the conference, we had more than 1,000 people every day online. So this really shows you the interest of all researchers on this topic. So don't judge a book by its cover. So there are a lot of people that are watching us online, and I think it shows the interest that they have on this. So the FinAccess Survey County Report, soon to be launched by the CS, is also a high-value output that counties will find as a reference document to address some of the challenges facing citizens in their counties. Now, we could go ahead and pose questions, but I think at this moment it's better not to pose questions. It's probably better to go back and sit there and watch and listen, etc. So I think it's probably best that I stop here, and we'll very soon invite the CS to deliver the keynote address and also launch the FinAccess Survey County Report. But before I finish, before I do that, I want to thank all those who have worked hard to bring us to this conference and to make it a success. Again, thank Tavneet for her invaluable contribution and encouragement. Of course, Tamara and McDonald in KNBS have gone beyond the call of duty in guiding the financial inclusion agenda. I also thank our colleagues in all these institutions. Before I invite the CS, I think all of us know him. Professor Njuguna Ndung'u let's just say, is a known quantity in our space, right? We all know that he preceded me as the governor of the central bank. He was there for 8 years, did an excellent job there. Before that, he was in the University of Nairobi, where he was doing excellent research. I note his area of study, his interest, but he's also very interested in financial inclusion, as we all know. He has done a lot of research on financial inclusion and other topics, but also not only while he was in CBK, but also while he has been at AERC, the African Economic Research Council, where in the second iteration, he was the head of that institution. Of course, now he's come back home. Yeah? Not only in the sense of the questions, research questions. We look forward to collaborating with you in your interest, and to me, I'm particularly delighted because this is your first public event. All the others, you've been with other people. So this is your first public event as Cabinet Secretary. We are honored. It is now my pleasure to invite our friend, the Cabinet Secretary of the National Treasury, Professor Njuguna Ndung'u, to make his remarks and officially launch the FinAccess Survey County Report. Karibu Waziri.
Good morning, everyone. Is this one fitting? when you come here after a taller person, you have to make sure that you adjust. I hope you can see me, and thank you very much for this invitation. And also, I can see that you said that I need to deliver a keynote speech. You can imagine how rusty I am. No, it's okay. You can imagine how rusty I am in terms of making speeches, because in the world that I've been living in the last 7 years since I left the central bank, is that you come in and say, I have 3 points to say, but those 3 points may last the whole day. Because essentially, what you're trying to do is actually perhaps provide a summary in terms of the direction research is taking, but more importantly, provide perhaps some few lessons that researchers need to take up, or even summarize a project profile that has possibly taken you 5 years. So that is why you find that kind of thing. But I'm back here. And thank you very much for welcoming me back home. I'm very happy that I can see colleagues that I've worked with for several years. It was historical moments because we moved mountains, but also it does appear that history does not want to leave me alone. It is still following me up. So today I'm going to talk about an area that was very, very happy to have been instituted, that is the FSD, and the kind of data that has come through FSD that keep on supporting us. And I worked very well with all the networks of FSD, and even when I left the central bank. So I've been a friend. But today, let me make some remarks along the lines suggested by the governor and consistent with the occasion today. And this is on financial inclusion statistics conference that is here in a school that we really admire, that is the School of Monetary Studies under the central bank. But the most important thing is to make sure that I start it officially. You remember the official part of it is to say that I'm very happy that I'm here. I want to recognize the governor of the central bank, Dr. Patrick Njoroge, whom if we start talking about our history, it can take another conference, but I'm very happy that we come from far. These days I can see he has lost a bit of hair, but, but if I tell you where he started, and of course you know why he loses the hair, he has to keep awake. But when we started, we had all the hair around us, but that is very, very important. I'm very happy for what you have steered the central bank, including the leadership and also the intellectual leadership in all the areas that central bank has covered. I'm very happy to also recognize the CEO of the Domestic Financial Sector Regulations, the CEO of FSD, whom I've known for many years, including her transformation to come to the Republic. Supported me and other organizations in different areas. So I'm very happy, Tamara, for that. I think I was also surprised that my friend Tavanit was also showing up. Thank you very much, Director General of Kenya National Bureau of Statistics, and we have found some useful insights coming from you, and we have worked together. I was telling the representative of KNBS how we have been working together with other people in terms of data governance and data policy in Africa, and that is work that is continuing. And all invited guests. The biggest problem with me is that I can focus on every institution and even individual and tell a long history because of long history of association. But let me say I'm very happy that I'm here, ladies and gentlemen, to witness this occasion and also to see the competition. I thought we were only doing that at the university. And most people who have gone through my hands at the university know what it means to be in front of me or even working with me. So I was very happy that we have seen the finalists, but those who have been left behind, there's another day we are going to enlarge the knowledge base in that area. So for me, it's an honor to join you this morning following the invitation to grace the Financial Inclusion Statistics Conference as your chief guest speaker. And I have also been informed that that I will be presiding over the official launch of the first ever FinAccess Household Survey County Perspective Report, and an award of cash prize to the overall winner, and that will be to the PhD students. I'm sure they are not part of the AERC, and if they are not, I'm sure they know the programs. Those are the programs we have launched for Africa, and they are still working very well. And those winners, for us, they make us proud because they are pushing the knowledge frontier. And when you push the knowledge frontier, it means that you inform policy as well, and that is an area that we are in. So I'm very happy that financial inclusion is getting very firm ground in the research arena, but also is going to be very, very important in terms of pushing the policy frontier as well. I must admit that these are great milestones in the history of financial inclusion space in the country, not only using the data that is provided, but even coming up with analytical capacity to analyze that data and come up with firm conclusions. By the way, because Tavanit was here, one of the things I've used from Tavanit, and there's a paper by Tavanit and Jack, Bire Jack, whom again are people I know, they wrote a paper and showed that actually financial inclusion had lifted a large proportion of the households from poverty. And that's why we started saying we are confirming one of the ambitions that we had, that financial inclusion can be used as a tool for sustainable poverty reduction. That in itself, you can see it's something. So bringing Tavanit here to even award those prizes, having read this kind of study, is actually very, very important. At the onset, let me begin by thanking the leadership of the Central Bank of Kenya, Kenya National Bureau of Statistics, and even the Financial Sector Deepening Trust, FSD, for steering the wheel of financial inclusion measurement in the right direction. 16 years since the baseline survey was set, that is, was produced, the first baseline survey was produced in 2006. I was also at the team that congratulated those who worked very hard that particular time to give us a baseline, and we continued pushing for that work. So, but then it means that we have been on that space for a long time. But also let me congratulate the team that has worked round the clock to organize this conference. The ingenuity of taking the research agenda to the universities, but very successfully also coming up with some researchers who have organized research, and even PhD students. For me, that is very, very important, because we are actually showing the continuation of knowledge generation that can be used for practical uses and practical policy application. That for me is very, very important, and that gives us some important handle in terms of how to use the knowledge generation and the data generated. And that data generated is practical because it reflects the lives that we lead and the constraints that we face. So for me, that is very, very important. The present opportunity is important for both students and faculty to interact with the regulators and policymakers, and also the industry. And that, for me, is very, very important, strong partnership in the world of research and knowledge generation. I've been in that world of research and policy world of research and knowledge generation for several years. I never lost it, even when I found myself in the central bank. I pushed my colleagues to also make sure that they participate in it, because I always say that you cannot push a policy that you don't seem to understand. If you understand the policy, then you can, if you understand the knowledge base, then you can push the policy to its conclusion. And that's what we have worked on. And we have worked on the financial inclusion agenda because we know the benefits, we know the outcomes, and we also know the constraints that most people face below at every level of the pyramid. And so it means that financial inclusion is also using financial instruments in the market, but we can also use that space as policymakers and policy leaders to push for new instruments that are going to make a difference given the time constraint or the time period we are faced in. Ladies and gentlemen, financial inclusion It's actually my bread and butter. And the governor said so because I started this work since 2007. We started talking about the failure of the financial sector in terms of addressing the needs that people seem to have, and even where banks are located in places where most people are not, perhaps cannot access. So in a sense, I've been there. I look back with pride on the decision to approve the Vodacom, Safaricom, and Commercial Bank of Africa partnership in delivering financial institutions through using mobile phone that came to be dubbed as M-Pesa. But it was a reflection of retail electronic payments platform that actually made a difference in terms of how the market works. For us, the retail electronic payments platform metamorphosed into a sophisticated and complex web of financial industry. And today, we have seen the fintechs all coming in to actually innovate around that space. But more importantly, we provided the banks with a technological platform to manage small accounts for people who otherwise would not have bank because their incomes are low but also irregular in terms of flow. So it means that some of the conditions that are set by financial institutions would not have worked for them. But that is a history we can write, but we also do believe, I also do believe that it is a history we can push to the next frontier. And for me, it is very, very important. The first thing is acceptance, and then once you have accepted that it's an instrument that can be used, the second level is how to use it, and the third level is how to apply it. And then, from then on, you can also be coping with the frontier developments that take place. So the results include financial inclusion as measured by access. And I can remember from 2006, we were looking at the data. It started off with about 27% of the population, of the adult population. Now we are at 84%, and I noticed that the governor was telling me that there's been a bit of stagnation. And then I remembered that we have to understand where we are coming from. One of the things I quote when I talk to people and they're talking about financial inclusion and the bottom of the pyramid is the data that Tavanit was produced by FSD on financial diaries. And that is looking at the bottom household set and how they manage their finances. And we realize that they are a very complicated set of decision-making that they are involved in, very complicated. I'm not sure we can actually come up with a structure of a model that can be tractable enough to follow them. But that kind of complicated systems that they used and diversity is because of the constraints they face. So in a sense, if you don't construct products that answer to the constraints the bottom of the pyramid face, or let's say at any level of the pyramid, then we are going to be lost. The market is going to be lost. People are going to be lost in the process, and the market will find that they have missed the boat. And we have seen several examples of that. But for me, the most important thing now is to say that we approved a product in 2007, a product that is able to navigate across all market segments, knowing that in Kenya, just like any other African country, we have market segmentation across everywhere, and the definition of segmentation differed in terms of income, distances, and all that. But if you have a product that can be able or can manage to navigate all segments of the market, and also navigate across individuals of different makeups, then it means that it's really a development and a success story. And we have lived with that success story and pushed it to the frontier to serve different aspects. But more importantly, we need to see how it has improved the development of all, and even in future it can be used to push the development of visible interventions that will work in every subsector of the economy. While the previous FinAccess household surveys focused more on measuring how the general population access the financial services and products from providers, this became less important as technology became the rails under which financial services can be delivered. Today, we don't have a fight or even an argument about how to deliver the financial services. Even payments, even to the government, by the way, even paying your taxes. You can imagine we don't have any argument. So it means that we have all been coordinated by that retail electronic payments platform. At one time, I described it as a tail that wagged the dog. And we continue seeing that. And we are happy about that. So we have seen several FINA accesses that they have given us details. The latest in 2021 household survey that was released in December 2021, and it indicates that the use of mobile money has been stagnating. I was telling the governor that we need to go back to the drawing table because we have to live with our own realities. And if you miss out the realities, then you'll be going on your way and the market will be going on the other one. There must be some diverse factors for this stagnation. But one that I can easily talk about is about the way the market produced credit scores. And they were supposed to be used by the CRBs. But for me, the way I understand the credit scores is that you penalize me if my credit scores are declining, isn't it? So you charge me a higher percentage. And if they are improving, you pat me on the back by saying good. So it means that the way I'm pricing your risk is now I need to give you an incentive. So pricing risk means that you penalize those who are destroying their risk rating and incentivize those whose risk rating is improving. That's the way it should work. But it cannot be a yes or no. Then it means you have the people will leave the market, isn't it? That is one of the examples of stagnation. But maybe, Governor, we can come up with diverse ways. But one of them, I wanted to bring that point home because we have to go back to the drawing board and ask ourselves why the telcos, that is those products, especially the savings products and the mobile and the digital lending products, created the credit scores or credit scoring, was to help us move away from the collateral technology that has punished the growth of the credit market. And even that's why we have so many of those markets attached to that. So it means that we can use that platform of credit scoring to price risk. And then it means that once we are able to do that, then the CRBs should also see what kind of technology can we advise. That is the space we are in. We can come up with so many of them, but I think the credit scoring mechanism was a game changer. And then we have to sustain that. But we do know that there are several issues that we really also need to deal with. The beauty about it is that they are not structural. We can actually deal with them with simple solutions that are actually also credible in the marketplace. The theme of this conference, leveraging financial inclusion statistics for policy and creation of economic opportunities, resonates very well with what policymakers and researchers in the industry are focusing on. And we have to look at several areas of actual usage, the quality of these services and products, and what impact on the individual or even welfare, and how it enhances consumers in terms of their own environment, and how using these services and products can actually improve the ways of life and even improve the livelihoods. We do know that quality statistics on financial inclusion are therefore important, or they should be very important, and they should answer the questions that we always ask ourselves. But more importantly, they should help us influence policy with evidence-based research, like the winners. Not only the winners, even the others who are in that party, they must have made some contribution. I'm one of those people who believe that your marginal productivity must be positive at all times, because if it was zero, then we should remove you without affecting that overall output. But my experience so far has been seen that most of it is negative. So it means that we improve the actual output when we remove you. So it means that those who researched made some positive contribution. I don't want to go into my own semantics of how I define things, but I define them because of a particular reason, something we can talk about. We note that this is essential given the changing trends and dynamics in financial inclusion ecosystem, because technological innovations and changing demographics and even consumer behavior will allow us to design policy changes and even economic outcomes that is going to help us manage shocks that are hitting us. Right now, we have been buffeted by multiple shocks, from the COVID-19 to Ukrainian crisis and supply shocks, to food security and climate change effects that are even keeping central bankers awake. I'm afraid they have to be awake because they are buffeted by supply side shocks and they don't have tools to manage that. But all the way, we know that this is quite problematic. So it's in a sense, having data in terms of interventions that we need to make is very, very important. I have had an opportunity to analyze the 2021 FinAccess Household Survey and the report that was launched in December 2021, and the indicators generated across all the 47 counties in Kenya have brought out some unique and challenging effects that you see across different counties, and more focus on the quality and impact dimensions provide opportunities for researchers and even policymakers to see how they can actually push the frontier and support that area and those people who are participating in that market and ecosystem. In fact, this has made it possible to prepare FinAccess Household Survey County Perspective report that we are going to launch today. But I do hope what we want, even after launching it, I do hope the county government representative that will be attending this conference and are going to carry that report home so that they can study it, will actually help them to interrogate the low-hanging fruits that they need to wake up and pick up that will help drive inclusive growth in their countries. Most of the time we talked about inclusive growth, but we didn't realize that actually a major driver of inclusive growth was also even inclusive finance. Because finance will allow you to save and invest in areas that are going to be commensurate with your income and your sector, in the sector you are working in, but more importantly, to give you a chance to actually have an array of assets that will help you escape negative shocks. And we do believe that is where we are coming from. And we do believe that with the counties will help us in terms of understanding that, and even how we are going to deal with the manifesto of the Kenya Kwanza government in terms of how we can finance micro, small, and medium enterprises, and how we can promote sustainable finance through green finance, addressing financial consumer protection issues, among others, but more importantly, addressing those who are at the bottom of the pyramid, so that they are not left behind, and we do not also come up with inhibitive product characteristics and even compliance costs in business models, which actually provide massive failures if we don't recognize the constraints, and even massive failures in terms of uptake of those products at the bottom of the pyramid. And that is why the government is launching the Hustlers Fund. And the Hustlers Fund is actually an instrument to correct market failure problems at the bottom of the pyramid. Most of the time we start some good products that will address the pyramid, the bottom of the pyramid, but what happens is that the product leave the bottom of the pyramid and move on to the next level. It's very important to move on, but what the intention should be is that people are the ones who should move from the bottom of the pyramid upwards, but the product that was supposed to be an intervention to correct market failure problems or support should remain in that location, and it should graduate people up the pyramid. That's what we are looking for when we hear about Hustlers Fund. I have to tell you, Governor, that my phone, which I left there because it keeps buzzing, I have more than 20 proposals of how to implement and to manage the Hustlers Fund. I don't want to say they have missed the boat, but I just want to say that they should have waited that we describe the product we wanted to bring into the market. It's an intervention, and you understand the intervention at the bottom of the pyramid. I was telling Tamara that when I looked at the data on financial diaries, it tells you exactly what it means. And so it means that you can use even the data on the financial diaries. I hope you can have a more recent survey that we can use. It becomes very, very important. So in a sense, what we are really saying is that the data provided in totality can help us construct products that actually can intervene in particular sector of the market or even level of the pyramid, and that would help us in terms of pushing. No one should be left behind just because we don't want to impose product characteristics that are not commensurate with the target population that we are dealing with. I'm reliably informed that the research work presented in this conference is in the last 3 days has made great efforts in providing some of the answers to some of the areas that I have mentioned. For instance, papers commissioned at the deep dives and the university students' competition at the thematic areas beyond financial inclusion, role of mobile money in driving economic opportunities. It resonates very well. By the way, I remember I had to go throughout the countries in Africa trying to tell them that if we introduce mobile phone-based transactions, we are going to improve the terrain. Some of them did not want even to listen to it, and today they are still languishing in that quadrant, that low-level quadrant. Others wanted to hear more. Others who are captured by the big banks didn't want to hear more. They are still there captured. So it's an area that you have to choose. But what we were trying to do, and this is very important that you, Governor, and the team, we have brought this to the frontier, is that let's give you the knowledge base. Let's give you the applications, and let's see how you can use it to influence policy. One of the things when I joined the central bank, at least, Governor, you found it much cleaner than when I joined in 2007. When I asked how you conduct monetary policy, I was given a lot of answers. Then I realized I think I'm in a different environment. This is not the central bank because it's a totally different institution. Because the way I understood monetary policy and even how you can use monetary policy and even how you can conduct monetary policy was completely different. Because the first thing was to look at currency outside the banking system. What is happening? Accounts in the banking system. Whom can we influence? Anyway, that is for another day. But it's very, very important. So we should not shun knowledge generation. The other set of papers were looking at the extent to which financial inclusion is an enabler to economic opportunities. Just imagine, very innovative thinking. Another one is the extent to which Kenya's financial inclusion journey has been fair, inclusive, and value-adding. And climate and environmental risks and financial inclusion. And the final one is women interaction with Kenya's financial sector. Very exciting. In fact, when I saw that, I remembered to carry the case study. When I left the central bank, I had told myself I'm going to devote some bit of time to write a case study on M-Pesa because we don't want it to be forgotten. And because I was writing it in Bravatnik School of Government, that is Government of Public Policy in Oxford, I made sure that I included a chapter on the politics of policy making in Africa, just to influence that. But what I realized also is my colleagues who was very good colleagues, decided first of all to list all the papers that I have done related in this area. And the latest one was on digital technology and state capacity in Kenya, and tells us about regulatory capability and all what I call innovative regulatory technology to cope with the market. So it's something that can be read, can be applied. So I'm very happy that we are pushing the frontier. And pushing the frontier helps us in terms of coming up with solutions. And those solutions are going to be very, very important. So these are diverse areas, and obviously the policy issues emanating from that are going to be very important. In addition, the guest lecture to be delivered later today by Mr. Assad Alam, Regional Director of the World Bank Group, which is focused on equitable growth, finance, and institutions. And that paper, the lecture is on frontiers of financial inclusion, is going to be very, very important because it's going to complement these studies and raise the profile of knowledge generation to that level. I'm sure that is going to be very, very important for even not only for the current researchers that joined in, but even for the future activities. So we can have a day where we want to listen to the frontier papers, and that is going to be to help us in terms of unraveling what is the value beneath FinAccess data set, how can we use it in terms of improving policy, how do we support the institutions that are working with that. And of course, it resonates well with the papers, with the works that I've been covering since 2017 or so. We've been working on financial inclusion and market development in East Africa. And what we wanted to show is that financial inclusion will be very well segmented by also market development. And we can also show and argue how it can be replicated across Africa. East Africa is quite advanced in that. And also, some works that we are also covering at the IDRC support. That one was at the Bill and Melinda Gates Foundation support. At the IDRC, they wanted to make sure that no one is left behind. Let us look at fragile and post-conflict economies, because first thing about conflict is to destroy institutions so that nobody is left behind. How do we bring that to work? So we have a diversity of choices. So I understand there are so many there are very many unanswered questions, research questions regarding several areas: financial inclusion, financial health nexus, the rigidity or lack of financial knowledge, rigidity in some of the segments of the economy or of the market. Sometimes that rigidity may be because of lack of financial knowledge or lack of financial instruments that can be used. So we still have a 5% population that is excluded. And we still have to find a way. And this kind of data will help us find a way of how to reach them. Is it the products? Is it the knowledge base? Is it income levels? But obviously, everybody would like to save. It's a question of how they can save. Everybody transact. It's a question of how easy it is to transact. And we have several issues that have come up. I know I have made some comments in so many areas, including taxation. Now that it's going to be my work to deal with that, obviously you're going to see some results in that. I'm one person who believes that taxation should be an incentive to the market. So essentially, we can deal with those who are excluded by using the kind of studies that have come in, or even redirect our efforts to addressing those issues, and we are going to get some solutions. We want to make sure that no one is left behind in the digital economy. And once nobody is left behind, then it means that once we are together, we can construct products that can cut across economy, but make sure we are conscious about the sectors or segments in terms of population. So I challenge everybody in the room to see that this is not the end. This is the starting point in terms of where we are going, and working together, KNBS, the central bank, will also be available in terms of looking at the diversity of those studies, even pushing the frontier a little bit further so that we actually make some practical solutions for those people who have been excluded, and enhance those who are already included so that they raise the flag and keep themselves to the utmost level in terms of influence, policy, and even prosperity. For, as I said, financial inclusion is related to prosperity. Let me conclude having said that's the problem of reading a speech. If you're not reading a speech, you determine when you stop and when you begin. But my biggest problem is that I also don't know when to stop when I'm not reading a speech. But when I'm reading a speech, there's a point I will say to conclude. So let me actually conclude. Once more, let me thank those who have worked tirelessly to make this conference a success. I also wish to thank everyone who attended this conference. And the governor mentioned that there was also a review mission, so you had, even beforehand, you had 1,000 people attending because essentially of the importance of that, and also the importance in terms of personal development in writing those papers. I believe it has offered a lot of satisfaction to everybody. But I also want to commend the efforts dispensed in preparation in the preparation of the FINA Access Household Survey to county level perspective report, which I do believe that it will give us an idea that whenever we meet governors at the county level, we want to ask the component, where are they in terms of financial inclusion? That's the first question. They give us their own global picture, local but global picture in terms of and then we ask what are the constraints in terms of moving forward, and then we are able to say, okay, if these are the constraints, we can ask some of the experts to construct products that are going to be consistent with that. Luckily, we have fintechs that are coming up. They are doing virtually everything. I think the latest paper that was published like 2 months ago by myself, supported by my research assistant. These days I have to use research assistants. It was on fintechs in sub-Saharan Africa and how we can use the platform or the fintechs themselves in terms of mobilizing savings or constructing a platform for savings. So you can see that we can have even localized fintechs to help some countries that feel that they know where they are, they know the constraints, and they want solutions. So that is what the question will be addressing the governors, and that I'm sure is going to be very, very important. Lastly, I wish to commend the close collaboration, not only among the 3 partner institutions, the Central Bank, the KNBS, and FSD, that have been very, very friendly with and working with. And I can also see that the Bankers Association is also closely into that picture. I'm very happy that that partnership is very important for our domestic financial market development. It's also important to inform the financial sector regulators in terms of advancing the financial inclusion agenda, as well as providing a rich knowledge generation in various dimensions of the products we would like to use. So I'll stop there just to thank you. That's to understand my appreciation of this, and also saying that I'm always conflicted when it comes to that because I'm a researcher in this area, and I'm also a policy driver in this area. I've been out there working on it. That's why when I start talking about this subject matter, I can continue and continue forever. But I think you understand the passion that I have in this area. So thank you very much, and good morning, ladies and gentlemen. And I'm sure this meeting is worth its salt, and we hope to continue in that space. Thank you very much.
A huge round of applause to the Honorable Cabinet Secretary. I think for you, as the Governor said, it was a homecoming to KSMS and also back into the industry, which you have a great passion for. So I will ask a few people to please come forward, led by Tamara Cook. If you please come to where the big red ribbon is. I'll also ask the representative of KNBS. I think there was someone, yes. And then obviously the governor, and we'll just give the CS a moment. Habil Olaka, if you could please also step forward. Dr. Habil Olaka, who's head of the Kenya Bankers Association. So, Governor and Bona CS, if you could please come to the front of the room. And so, led by the CS, Ansek, I think you will help us with that. And I'll ask all of you to witness the launch of the report itself. And if you look at the screen, that is a few screen grabs from the book itself, the report itself. Yes, if my people at the audiovisual, we can just get back to the room. The governor is presenting a copy of that report, the physical copy of the report itself, to the CS. A big round of applause. And I'll ask you all to please stay there so you can get a few photographs taken. Our photographers, if you want to get your photos in. But CS, please hold the book up, if you don't mind. Yes. And then their copies being distributed. No, they are being distributed. There's a few more here. Could I please have one more? Here we go. Habil. So if you could please all hold it up so we can get a good photograph of all of you holding the book. And then because I've got my colleagues from the media, they'll ask you to pretend that you're scrutinizing it and reading it. That's a picture for Monday morning's paper and explaining something or other. But the report now, I believe, is with all of you. If you don't have a copy, just signal the people who are walking around the room. I think there's copies being distributed. And I think we have quite a number that if you do want to see it in another way, they can get to you. But also don't forget that this report is also available electronically, so you don't have to have the physical copy and sending that around to people who need to read it. It's also available electronically on our websites. That is the Central Bank website, KNBS as well as FSD. So later in the day, if you log into those sites, you should be able to pick up electronic copies of this. So another big round of applause. It's taken a lot of hard work to get to where we are today. Applause means you clap. Thank you very much. I know everyone now is busy reading the reports. So Asanteni sana, our guest, you may take your seats. So that part of our agenda and program this morning obviously brings, it's a culmination of what's been going on for the last 1 week. Most of you have been on with us for the past week, but also it's a work of many, many months of research that has gone into this, trying to break down the data in ways that make sense, but also in this particular case, breaking down this data geographically, which is important to understand. And I'll not pretend to say anything more than that. I've got professors sitting in front of me, so I will be sufficiently intimidated. And so with that, we come to the end of this first part of the program for today. There's still a very, very long program for the day left, so don't worry. The excitement is not over. But for now, led by our chief guest and the governor, we will ask you to go into a break. It is now just about 26 minutes past 11. So maybe about 17 or 18 minutes, we come back here at about 11:45 to begin with the rest of the program. So Governor and CS, if you could please lead us out, and the rest of us, there's still a lot of refreshments from what we had in the morning, but come back here 11:45 to continue with to lead the rest of it. So 11:45 mnaweza simama sasa. So 11:45 tutawaambia mketi tena. So it helps if you take your break now.
Haya, kwa majina naitwa Penina Wahu kutoka LD, but nakaa hapa Kawangware, ndio nimeka biashara ya salon hapa Kawangware. Kenye naona inanisaidia na hii biashara yangu ni mambo na chama za wamama. Chama za wamama zinasaidia sana sana. Kama umelemewa na business, wanakuja wanakuinua. Kwa saa hizi mimi niko na chama 4. Mimi nimeona hizo chama zimenisaidia juu kama hii ya utugi. Tunaendanga kutembelea wazazi. Kupitia hizi chama za wamama tumeungana. Mtu akiwa na jambo, kama umelemewa, kama uko na ugonjwa, wanakuja wanakutembelea. Hapo awali nilikuwa na circle, but nikakuja nikaona afadhali nikuwe tu kwa hizi chama za wamama kuliko circle. But nikaona chama za wamama zinasaidia juu nikitaka kitu emergency naenda tu kwa chama na waambia, alafu kama ni kitu kunisaidia kama pesa kidogo tu ya kuinua biashara yangu wananipatia. Hata kama sijaweka stock ya kutosha kwa kazi yangu, lakini natarajia nitaweka ya kutosha kupitia hizo chama. Tena na wakopa kidogo kidogo na kuja naendelesha biashara yangu. Kuna watoto 2, mmoja ako class 7 na mwingine ako class 1. Na kupitia hizo chama za wamama at least sijaiona mtoto wangu amefukuzwa. Mi kulingana na kwenye chama zimenipeleka na kwenye zimenifikisha, mi sioni maana ya bank ama circle. Mi nategemea, naona tu afadhali tu nikae na hizi chama za wamama. Juu kwa bank tuweka pesa, umeweka, lakini at last maybe kama unataka loan itabidi ufuate procedure kubwa. Sasa mi sioni kama naweza fungua any circle. Acha niendelee tu na chama za wamama.
My name is Kevin Mulwa. I sell suits in town. We've been in this business for the last 10 years, much experience, challenges here and there. There has been challenges like you save with the bank, then when you go for loan maybe to boost your business, you think you get they want so much. I had another bank which I used to operate here in town. They add so much hidden charges where you find when you are getting your statement, you get they have charged you so much, and when you go back there and you ask, they have no answers. You are taken from one manager to the other. You are told come tomorrow, we'll sort you out, and it was very frustrating. Most of the banks we get, you will find people who are employed there like they don't have information. Maybe they have the information, but they are not willing to give out the right information because they want to sell fast. They want you to open an account with them, and they have been given targets. So the information which they give you, they'll give you information which will make you open the account. Basically, we need to get the right information right from the start when you are opening the account, so that you get to know where maybe there are some deduction of your money at the end of any transaction.
Majina yangu naitwa Nancy Wanja. Mimi ni mwanabiashara wa Githurai. Mimi ni muuzaji wa minji, in wholesale na retail. Kuna challenges zile zinapatanga watu kwa biashara. Sometimes unakuta biashara imeenda chini. Saa nyingine unakuta biashara inaenda juu. Kwa hivyo wakati biashara ziko chini, ndio tunahitaji mikopo ya hapa na pale. Tunaenda kukopa hapa na pale. Unakopa on daily basis. Mimi nikilinganisha pesa ya banki ama ya sako. Kwa sako interest ya chako ni kidogo sana. Lakini kwa bank unakuta saa hii wamekupatia a loan of 100,000, lakini unakuta umelipa kama 1,300. Lakini kwa sako haikuangi na faida kubwa sana. Kwa hivyo na prefer sako instead of bank. Sababu nikienda kwa bank kila mtu atakuwa anajua mpaka nitaitishwa maseginitors wa kunisainia, lakini ya talama ya M-Shwari haitisi seginitari, haitisi mambo mingi. Kwa hivyo mimi naenda tu na nikukanyakanya tu kwa simu alafu pesa inaingia. Kwa hivyo tumefurahia sana mambo ya Tara, mambo ya M-Shwari, KMBC. Those are the quick means of mikopo ile tunapenda sana.
have to go to the ATM at all. I even have an ATM card that I will only use because it's a Visa, I use to pay bills. I don't really use it to access money. When I need to get money, I'll just go onto the line, I'll use my phone to go onto the online mobile app and access money. And this definitely makes things easy. And well, so far, the individual clients also pay us using mobile money, so still very good. The bigger clients, of course, will pay by bank transfers or by checks, so that means those have to go into the bank account. Yeah, I think the banks need to be more friendly or come up with something that, because for us being a partnership, when I need to get money, I still have to physically go into a bank because I have to walk in with a check that is signed by both signatories. We cannot have an ATM card because this is a partnership. So I think the banks should consider doing something. I think mobile banking has helped increase in terms of volumes, because sometimes there are people who, when they walk in here, the first thing they will ask is, do you have a till? So in that case, there are people who will comfortably come here because they know that they can pay by M-Pesa even if they don't have cash. Because as it is right now, there's so many requirements and so many small prints that banks require before they can actually give you even the minimum of loan, regardless of the fact that you have lots of money with them. So getting an overdraft facility is close to impossible. So I hope that this initiative is going to help them understand our needs so that they come up with a product that will help us.
Naitwa Paul Suyanga na niko na miaka 29. Niko na watoto wawili. Mmoja shule, mwingine bado hajaingia shule. Mimi na savingi na natumiaga Equity, lakini sijapata pesa ya kusave. Ningependa kuanzia biashara, lakini sasa ndio naanza kujipanga nipate pesa ya kuanzia biashara. Mwaka uliopita singeweza kusave ama kujipanga kwa vile niligonjeka, na ikawa matumizi yangu yote yameingia kwa gharama ya hospitali. So ile pesa nilikuwa nimeweka yote ilitumika. Hivyo saa zingine life inakuwa ngumu. Kama uko na familia, ukigonjeka, unaweza tumia pesa vile hukuwa umejipanga. Yeah. Lakini kulingana na vile umejipanga, naona itarecover tu. Nitarudisha ile mali nilipea ama ile pesa niliyotumia. Kufanya kwa kusave na kwa kuweka kwa bank, nipate kuanzia biashara. Sijaitumia Tala, M-Shwari, kwa sababu wanapatiana loan kidogo, mkopo wa chini sana, ambaye haiwezi anzia biashara yoyote. Sijaipata kuchukua loan kwa banki yoyote ile ama kwa Equity, kwa sababu ya inahitaji mtu ambaye ana save ama anapata pesa kila mwisho wa mwezi. So sijawahi fikiria kusave na kuchukua loans.
My name is Boniface Kithara Kimathi. Okay, I'm an entrepreneur at Kangemi Business Center, where I have a cyber cafe. To start my business, I started with my own capital, and towards growing the business, I decided to take some loans from Tala, from KCB M-Pesa, after which it wasn't enough. I decided to partner with a savings circle that I had been since 3 months ago, where I took a loan of 80,000 and added up to my capital so that I could rent a house where it's strategically accessible by my customers. These loans, first of all, the one I took from Tala, I borrowed from KCB M-Pesa so that I can pay it because the period was almost. Actually, I like betting a lot. I love football, and I like placing my bet, even though I don't know the results which will come after. The little profit that I make, I take at least even 50 bob, which I take into SportPesa, and at least see if I can get some casual money to juggle in between my other responsibilities. For the medium loan givers, they should reduce how they pressure a client to pay that money. sometimes business is bad and you cannot be sure that you'll pay within that 1 month. Banks give the loans, but the process of processing the loan is like too much. The processing of the loan is too much. You have to be told to bring how many guarantors, and the interest rate, I find it so high than SACCOs and these other small scale loan givers.
The role of FSD Kenya for HSNP was that of a payment service manager. And that included, to start with, the design of the payment solution. So both in the first phase and the second phase of HSNP, FSD was the one designing the payment solution.
The role of FSD in developing a solution for HSNP began with what I would call a challenge from DFID, where they asked us to place $20 in the pocket of a person in Turkana on a regular basis every 2 months, and to make it affordable. What we did was we set up what today is known as agency banking. At that time there was no agency banking in Kenya, but with a special dispensation from the Central Bank of Kenya, we were able to set up an agent in Turkana, in Kakuma, and we registered about 500 initially beneficiaries using biometrics, because we wanted to make sure that we were able to positively identify and authenticate the individuals or beneficiaries who are receiving these funds. And also we wanted to make sure that this was a process that could be used by people who are not literate. We then went out and advertised for a payment service provider, somebody to come in and help us to roll out the solution. And out of about 18 applications, Equity Bank emerged as the best candidate. So we're looking for a partner who was really keen to work with the bottom of the pyramid and to continue to develop solutions for the people of Northern Kenya.
In terms of payment processing, FSD Kenya was responsible for just making sure that the payroll was in order, coming from government, and making sure that the funds that were coming from FCDO and also from government in the second phase were processed in good time and delivered in good time. There was also another role around SLA management, that is the service level agreement. These are agreements that were part of the contract, and FSD's role was to ensure that these had been maintained by the payment service provider, both from a beneficiary point of view and in delivery of the payment. One of the things that we did was to do a beneficiary satisfaction survey, basically going out to beneficiaries and asking, are you satisfied with the service that you're receiving? From the payment service provider side, we were to ensure that the payments were delivered in good time, accounts were opened in good time, cards were delivered also within the framework that we had agreed on. Some of the key design principles that we took into consideration, especially in the design of HSNP, were one, predictability and timeliness of payments. In a program such as a cash transfer program, it's important that you get the payments out on time. So in the case of HSNP, we were able to pay on the 5th of every payment month. Another key design principle, I'd say, is keeping personal data of the customer private, especially in the age of internet, where some of this personal data can be misused for fraud or other things. It's important that you ensure that this is covered. The other thing is accessibility, ensuring that beneficiaries are not walking long distances to get to a payment point was key for us. There was an SLA requirement around making sure that 80% of beneficiaries lived within 20 kilometers of a payment point, which was adhered to.
Hawa mama wakifika, ako na ATM card na kitambulisho. Kwa hizi zote mbili unahakikisha majina yenye yako kwa kitambulisho na yale yenye yako kwenye kadi ya ATM zinafanana. Kisha utachukua kadi uingize kwenye mashine. Ukishaweka itakuitisha kidole. Utachukua kidole chake uegeze kwenye mashine. Kisha ita verify. Kisha verify utaweka pesa. Ni shilingi 5,400. Kisha toka utamlipa pesa. Kisha tuko na kitabu ya benki, unaandika maandishi. Utaandika majina yake, ile pesa amepata na kuna na hiyo transaction.
Pesa ikikuja, agent inapiga simu. Wanasema wenye wanapatanga pesa ya Lopetuni wanatakana wapate pesa tarehe fulani. Chief kwanza ndio anatangulia. Nasema pesa ya Lopetuni imekuja, itapatikana tarehe fulani. Agent anasema msanya watu wote wakuje tarehe fulani wapate pesa. Nilikuwa napokea 4,000 sijui na 100 ngapi. Alafu wakarudi tena wakaongeza. Saa hii tunapokea 5,400.
Some of the challenges in implementation of the HSNP program is about the IDs, and we saw this when we were opening bank accounts in the second phase. Once we set out to open the bank accounts, we realized about 40% of the beneficiaries did not have IDs, and that sort of set us back in terms of our work plan and in opening those accounts. One other challenge is about getting viable agents at the time when we were starting, because the businesses were quite small, and depending on the amount of money they were paying out, then that could be a challenge. So that was an issue, but currently we have about over 500 agents across the 4 counties that are serving beneficiaries.
The program has had very positive impacts. Each time there's a drought, the household lose assets and poverty increases in those households, because now you've lost your sources of income, livelihood. In the households where we have this program going on, the poverty did not increase as much as it did in the other households that were not benefiting. Regardless of whatever was happening, the shocks and all this, at least they could eat. They could have something to eat because they had cash, they knew the cash was coming, it was predictable.
We have seen economic impact to our vulnerable households. The money that the household gets can utilize from other things. The household can buy foodstuffs. The household can purchase medical supplies for ill household members. The household can venture into small-scale businesses. And that has brought a shift from dependent population to what I may call resilient.
Hii pesa nimefungulia naye kibanda. Nimeweka mabasta, nimeweka unga, nimeweka nini, kila kitu tu iko, hata peremende. Na hii pesa inasaidianga saa zingine natuma kwa shule. Saa zingine kama maneno ya shule ijokuja nanunulia vitu naweka kwa duka.
Evidence shows us that providing cash is actually
presentations, speeches, and discussions. And I want to begin with Robert Nderito from the Kenya National Bureau of Statistics, which, as you very well know, is one of the partners in this process. If you could please come up, Robert, or if you want to speak from down there, or if you want to sit and speak, it's all up to you. And after that, we'll continue with the program.
Yes, good after tea. This morning, I want to learn you through the report that has just been launched by the CS. And I'll actually not take a lot of time. Maybe in the next 20 minutes, I'll actually be done. So the outline of the presentation is as reflected there. We'll give a small background, discuss the methodology, then look at the county statistics as we got them, look at some dimensions in terms of the access, the exclusions, the quality impact, and we'll just have to go through one case study, that's Mombasa. It has been picked at random, and then we'll have some conclusions. My name is Robert Derito, as has been mentioned, Director in charge of production statistics from KNBS. So I'm not McDonald George Budo, but I'm representing him here. So in terms of the background, it has already been mentioned that one of the main reasons why we carry out fin access surveys, it is basically to monitor the developments and also have a better understanding of what has been happening within the financial landscape. And the very first study in Kenya was actually carried out back in 2006. So the 2021 is the 6th study. And it has already been mentioned that we have expanded this to the county level because the previous 5 studies were mainly focusing on the national level data. But in the 2021, there are those, the expansion that was made to now cover the counties. And the 4 dimensions have been considered in all the studies. That is access, usage, quality, and also the impact of the financial sector in terms of how people have been accessing these financial services and also the related products. The 2021 FinAccess, again, was a joint venture between the CBK, FSD, and other stakeholders, and also KNBS, and we continue appreciating the good, relationship, working relationship that we've been having. The basic report was actually launched last year in December 2021, and we are now here to continue with further analysis to present the county level statistics. In terms of the methodology, the survey was designed in such a way that it would give us estimates at the national level, rural, urban, as well as all the 47 counties. And the Bureau maintains a statistical sampling frame that is actually good enough to give us estimates at the county level. And depending again on the level of design, it's also possible for us to get estimates even at the sub-county level. In total, we had selected over 30,000 households, but the households that we found to be eligible were over 25,000. And out of those, when we posed the questions, we actually received responses from about 85.6%. The target population was anyone within those households who was aged 16 years and above, although the analysis focuses on the 18 years plus. So in this case, this was we used the stratified sampling. It was a multi-stage, meaning that the results that we have are actually really reliable. So just as a recap, because this might have been presented earlier, when we look at the access in terms of at the national level, the totality was about 3.7. And this has actually risen from the 26, I believe, 0.7 that had been monitored way back in 2006. And when we look at the population that is excluded, that was about 11.6%. And the overall access, that's both in the formal and the informal, was about 88.4%. We have a chart there. I don't know what is happening to... Yeah, maybe the team back there should actually focus on the presentation. Thank you. So if you look at the chart down here, we've tried actually to give the levels of access all the way from 2006 to 2021 in terms of the formal prudential. That's basically the banks. We have the formal non-prudential when you look at the mobile money. Then we also have the formal registered in terms of the people who gain access through other formally registered entities. And we also have the informal as well as the excluded. So in this case, we have this information, and you also find it in your book that has just been presented. Now, if we are to then focus on the county level information, we are doing this because of two reasons. One, when we got the new constitution, it has actually become necessary for us to disaggregate the information at the county level for the purposes of planning and decision making at that level. Meaning that, like now, when we look at what we had presented, if I tell you that the access starts at 3.7%, that will only be at the national level, yeah? But that information may not be very useful to actually, do planning at the lower level. So that disaggregation then becomes very important. But at the same time, it's also very important for us to ensure that we provide statistics that will be useful at that county level. The overall figure actually hides a lot of, variation. It wouldn't give the exact story, especially when it comes now to the counties. And therefore, by disaggregating this information, it is then possible for you to actually come up with a county-specific product that would actually then help to improve in terms of, the financial inclusivity at the county level in this case. So it is important then for us to have information at that level. Focusing on the formal access, if we are to look at what has been happening, or rather from what we got from the data, nationally, we had the 83.7% as the population aged 18 years and above that could that was gaining this access. But looking at the distribution across the counties, it actually ranged from 95% in Nairobi, and it was actually lowest at West Pokot at 57.7%. And one other thing that probably we could note from that chart is that we have some few counties, Nairobi, Nyeri, Murang'a, Kirinyaga, and Kiambu also, that had over 90% of the adults aged 18 years and above actually gaining this formal access. So in this case, when again we look at some of the counties like West Pokot, Turkana, and also Garissa, these were actually the lowest that could, indicated that we are gaining this formal access at those percentages. That's West Pokot at 57.7%, Turkana 60.3%, and Garissa at 60.7%. The funniest thing is that when you look at the data, I don't know why this isn't moving, there is the gender disparity again. If you look at a county like Kilifi, the males, about 84% of them have access to these formal, services. But again, when you look at the females, it's about 66%. This slide, what it is basically giving is that gender gap in terms of access. So as much as, yes, we may argue that we have like 3.7% nationally, when you disaggregate that by gender, you realize that there's actually that gap. And this slide actually presents the 10, top counties that we realize that there is that huge gender gap in terms of, the formal access to formal financial products and services. And when you look at a county like Narok, there's a 17% difference between the male and female. If you look at Kware, it's about 16%, meaning that this information, once you get into the various counties, it is actually possible to come up with, gender-specific, products that will actually help first to bridge in the gap. And of course, in the process, it also enhance the access to these products and services. Focusing just a bit on the informal access. Overall, nationally, we had about 4.7% of that population aged 18 years and above that indicated that they were getting this informal access, be it the shamas and the like. And focusing again on, these counties, a county like West Pokot indicated that about 29% of the population were actually accessing these informal services. But at the same time, we also have the population that is excluded. Overall, 11.7% of that adult population, 18 plus, indicated that they're excluded. In this case, either they were totally excluded, or probably they could only get maybe the services through their friends, social networks and the like, but not either formal or informal in this case. And a county like Garissa, about 34.3% of that population, 18 plus, were actually excluded. So you'll find a lot of useful information once you get into the details of that report. Focusing just a bit on the usage, we focused on the usage at the bank level. That is including the mobile banking. We also looked at now the banks separately without focusing on that mobile banking. And then maybe the population that had mobile money accounts. And just briefly, nationally, in terms of the people who are getting, who are using the bank services, including now the mobile money, that was about 44.1%. But it was actually highest in Nairobi at 71.6%. And the lowest in Garissa at 3.8%. So there's actually that huge disparity in terms of the usage of the banking services when you look at the counties. If we look at the banks alone, the national average was about 23.8%. And focusing on Nairobi again, the population 18 plus that uses banks, that was about 44.6%. If I look at the mobile money accounts, the national average, 81.4% of the population, 18 plus again, has those mobile bank accounts, with the highest being again at Nairobi at 93.9%, and the lowest at West Pokot at 54.5%. Again, if you focus on the different forms in terms of the usage, I'll just take just one example, like Trans Nzoia as an example, that has about 49.1% of the formal, usage. A further, that would be 44.7% is informal, and then we have the self, that would actually be at about 6.2%. And basically, this is focusing on the farmers in terms of what is their main source of livelihood, and again, disaggregated in those three levels in that case. So we have done that for all the counties, and you'll also find that information useful. Of course, there'll be different counties have different, preference in terms of whether it is the formal or whether it is the informal. In terms of the MSMEs, I seem to be having a challenge with the technology. If you look at the micro, small, and medium enterprises, again, in terms of the main source of their financing, we've also given distribution of the same. I'll take an example like that of Lamu, that gave about 42.7% of the MSMEs. The main source is from formal sources. we also have the 7.8% informal, but then we also have, some of them relying on self, sources rather than the formal or informal in this case. Looking at the dimension of quality, there are two aspects that we are focusing on here. One of them would be the population that had heard about the CRB. And interestingly, overall, about 42.1% nationally of the population 18 plus are the ones who had heard about the Credit Reference Bureau. It was highest at Nairobi at 69%, and the lowest at Wajir at 3%. And in total, if you look at the counties that we are aware about the CRB below the national average, there are about 28 counties, meaning that we need actually to spread this information so that probably everybody then gets informed. Looking at another aspect in terms of the population that was aware about the cost of borrowing, on average, only 49.3%, that's below half the population, was aware about the costs of borrowing. Nairobi had the highest proportion at 70%. Again, Wajir and Bomet, Mandela, those counties had the lowest, awareness in this case. In total, 26 counties actually had, information about the cost of borrowing below the national average. And you will probably be surprised that some of the counties that you'd expect that they are aware, I'll give an example, like Mulanga, about 30.6% weren't aware. As much as, the financial access in a country like Mulanga was over 90%, in terms of like now the awareness here, in terms of the cost of borrowing, they are ranking very low. Kirinyaga likewise, and you will get that information. Going to the last kind of dimension in terms of the impact, we were looking at the financial health, whereby there are close to like 9 variables that were captured. But in terms of the financial health, on average, nationally, the financial health stood at 17.1%. But a county like, is it West Pokot? No. This would be Trans Nzoia, registered the highest, financial health at about 37%. So we have done that distribution, and you'll find all this information available in the report. But just looking at one other aspect in terms of the impact, like the ability to invest, you'll find a county like Turkana, about 76.1, these are indices. In terms of it's easier to invest probably in Turkana than in some of those other counties. There is actually that spread, and I'm sure the county council of governors and the county governments will also find this information very useful. So if you go through the report, you realize that there are different aspects that we've presented. One case is Mombasa, as an example, just to give you an indication of what you'll find. There are several variables, a lot of information that we have given in terms of like the large size, the population. You'll find that information in the report. But one dimension would be like access. Mombasa, about 89, close to 90% of the population 18 years and above, they would actually gain their financial information in terms of from the formal. But again, we can see there is that slight disparity, about 90.9 men, and the women at 88.7%. So for all the counties, we have provided this information. And again, by the different levels of gender. For instance, if you look at the population that is excluded in Mombasa, it's about 7.9% of that, those adults aged 18 years and above, of which 7.6 are men, and again 8.3 are women. So there is that, gender gap in those respective counties. If we look at the usage, it's drained to project. The population overall that uses the bank in Mombasa, that is both the banks and also the mobile banking, is about, or the mobile money, 56.1%. And if you were to exclude, the mobile money, you'd have that at about that 5%. The proportion that uses the SACCOs is about 9.3%, meaning that it is low. The population that also uses financial services products from insurance is about that 4.8. So for every county, this kind of information is actually provided. Looking at the quality dimension, in terms of the financial literacy, looking at the proportion of adults 18 plus who engage in betting, like within Mombasa County, you'd find that at about 17.8%. The people who default on loans, well, we acknowledge that this might have been during the COVID period, was quite high at 65.5%. But we find this information to be very useful. In terms of the challenges faced by farmers in Mombasa, as an example, the proportion that had indicated that they didn't, have finances was about 11.2%. Small large sizes, and in an area like Mombasa, this would be expected, was about 34.5%. So for every county, you will find this distribution. And I believe that if there are to be any interventions or any products to be developed at the county level, some of the challenges that have been highlighted would actually be very useful for the county-specific, interventions. In terms of the impact, there are several dimensions. I'll give that example of the ability to invest. We have about 35.5% of the population that indicated, that they have that challenge in this case. In terms of coping with risks, a whole 24% raised, concerns in that area. Some indicated could not raise lump sum in 3 days. That's about 15.4% in this case. If I'm to go to the last slide, because you have the information, I'm sure you will find it very useful. It has already been mentioned that you'll find the soft copy in our website, KNBS. You'll also find the same in the CBK website. That information is there. And I believe even FSD will also ensure that this information is actually available again. What conclusions can we draw from the analysis that we have done? One, we have taken note that there are disparities in the financial inclusion across the counties. And that's one area of intervention. And it is not just, the difference in terms of at the aggregated level, but whether it is in terms of the people who are gaining either the formal or informal financial access, or probably at the gender level in terms of male-female, there are those disparities in this case. And we've also noted that there's that gap, as shown by one of the slides that I gave, between the highest and the lowest in terms of the inclusivity across the counties. And it is therefore then necessary for us probably to think in terms of coming up with policies and programs to try and bridge the gap that exists, either within the counties or then also across the counties. And we believe that with that county information that we've just released, that we'll be able to inform consumer education at that level, so that we can also develop products that would actually ensure that that financial inclusivity increases in those respective counties. Thank you very much.
Thank you very much. Without too much ado, hoping that is perfect English, of course it is, I'd like to now ask Tamara Cook to please come up and make her presentation.
Is there a problem? If so. Good morning, everyone. It's great to see your faces, and I thank you for joining us on this journey. You know, the theme of this week has been deep dives into the Finaxis data sets. And so I'd like to invite you, maybe not so much to dive deeply with me, but perhaps to go on a little bit of a swim. Because I won't have time to present everything that we've heard over these last few days. But for those of you who've been here every day, I'd like to remind you of some of the key impacts or insights that we've heard. And for those of you who maybe weren't able to join every day, I'd like to tease you a bit with the insights we've heard and encourage you to go back and read the presentations, read the papers when they come out, and join us in this conversation. So this morning when I met with the governor and the CS when they were here earlier, they asked me, what did I think? I had the rare honor of sitting in all the sessions for this conference. I told them I felt like I'd gone on a little mini sabbatical, almost back to school, where I got to listen to these deep insights on the research. And so now I feel like I'm giving a book report. And I will not do justice to any of the presentations that we've heard, but what I've done is I've picked a few slides from each presentation, and I'm going to share at least one insight that I had, and I hope you had as well. So some of you were together with us on December 15th, 2021, when we launched the original Finaxis survey, and I was asked to give a presentation. And what I did in my presentation is I basically asked a series of questions. When I read the report, there was so much more I wanted to know. And this conference has been a part of answering those questions. And so the last thing I said in my remarks that day were, what are your questions? And today we've heard from some of the researchers, and congratulations again to those who won the prize for the students. And yeah, stay tuned. So those of you who've been around here in person know that there is a diving board right next to where we've been eating. For those of you joining online, you may not have seen this diving board, but I thought it was an apt picture to use as we think about how we dive deeply into the research that we've heard about this week. And so what I'm going to do is go through the 4 main sessions of the deep dives, and I've just copy and pasted what those papers are. I'm not going to, again, try to do justice to each of those papers. But what I've done, let me tell you this before I show you this, is I've used a yellow arrow to draw your attention to one insight from each slide. So I can't present the whole slide. I'm going to just focus in on where that arrow is pointing. So the first paper, which was from Finnmark Trust, Gimarich, and KNBS, was looking at livelihoods. And they presented many things, but one of the first slides that really caught my attention was this one, which shows that all welfare measures have significantly worsened in 2021. And that gray box shows you kind of a pivot point that they talked about, showing how things had gotten worse. And then they considered what are the economic pillars that are driving declines in jobs and well-being. And they looked at these 4 areas of the composition of GDP, the youth bulge, market access, and government coordination. And I'm, again, just going to tease you with just one of those, which is the youth bulge. And I think we're all aware of how important the growing youth population is and how much more excluded youth are from the general population. And that's a big question that we need to answer as we think about the policy implications of this deep dive work. Moving right along, again, I'm not going to share the full stories, but the reason I included this slide is that it's great to look at all the charts and think about the statistics, but there are real people behind every number. And so it's really important for us to understand the stories that really spell out what those insights from the charts are telling us so that we consider the impacts of finance on real people, including these 2 women who were talked about, Cynthia and Paris. Moving right along to the next paper, we saw some fascinating segmentation work. And here I've just pulled out one of the segments that was highlighted, which is the urban core casual worker. That's 3.3 million people More male, more young, less educated. But those two yellow arrows that you see are showing that there are huge market opportunity, 25 billion shillings, if you take kind of their median income times the number of people. And yet they're using formal financial services at a very, very low level. And so what is the opportunity there to better reach this important segment of Kenyan society? And this graph, lots of numbers, lots of charts here. It shows all 8 of the segments that were presented. And I've put the yellow arrow looking at that urban core casual workers. And what you can see is that they are using credit at about 61%, but most of that credit is just to help them get by day to day. It's not about investing in the future, and even in this case, not so much on emergencies. This contrasts with some of the others, which are, for example, public sector employment, private employment, small firms, where they're investing a bit more with that credit. Now I know you all want to go and look at that segmentation. Tabitha from KNBS presented the FinAccess MSE tracker, which was also mentioned in the speeches earlier this morning, about how important it is to take a look at the FinAccess data that we have and say, what's really happening? This tracker happened during COVID. And in November 2020, when they went back and looked at the MSEs who'd been included in the 2019 FinAccess survey to see, you were in business in 2019, are you still? You can see that those in the green circle were no longer in business. Through each round of that tracker, more and more of those businesses fell out, and only a few came back. And so going from 262 in November, which had been 347 in 2019, to only 179, plus the 15 who had reopened their businesses. There's so much more in those trackers. Definitely check them out. So moving speedily along to our second deep dive. To what extent has financial inclusion been fair, inclusive, and value-adding? For those of you who are with us, this is the session that happened yesterday morning, first thing. The first paper that was presented by Mariangela Pensa was really looking at what would exclusion look like if we looked at it from a broader perspective. The numbers that we just saw from the counties is looking at exclusion kind of in pure access terms. But if we were to consider what about the use of those services and whether they're providing value, what she and her team found was that there is a much higher level of exclusion than what FinAccess shows if you look at a more holistic picture. And while exclusion is decreasing, that yellow arrow points to how if you think about more than one product or a diversity of financial inclusion, 34% is still a very high number for those who are not fully using finance the way that it's intended. Moving right along, there was a Financial Consumer Protection Outcomes Index presented by Christine from Sinfree. I personally found this one very interesting. And what they were doing, you can see this kind of spiral. On the left, you've got financial consumer outcomes, and on the right, you've got consumer protection outcomes. And so looking beyond what the regulation or the law says, how are consumers experiencing both consumer protection and their own kind of outcomes? And so if you look at how Kenya did against this, remember we've got 84% financial inclusion, but according to this, only 67% on this index. What I found even more interesting is when you break it down along these different indicators, you can see that the ones that are lowest, those red flags, are around, are financial services meeting the purpose that people have, and do consumers have voice in their interactions with financial service providers? Still quite low on both of those. And if we double click even further and compare different parts of the population, you can see the difference between men and women here. Women are much less likely to have financial services that are meeting their purpose, that have full disclosure, and the lowest is that they don't have the voice that they need to negotiate with financial service providers. A lot of great questions. This is a new index, something to explore, and I think something we can dig deeper into. Moving along to financial health, my colleague Amrik presented the paper that she had and Paul Gubbins had done on financial health. And the reason I've got the yellow arrow pointing at the pink boxes is some of you have heard about financial health, but what this chart is showing is those who have the least financial health has basically mirrored it has increased significantly, mirroring the decline in those who are actually financially healthy. A real point of concern as we think about increasing financial inclusion but lowering financial health. And if you look at this, and there's lots of numbers on here, but the main point I want to make is that the short-term needs have become the predominant use case for savings and credit. It's important to be able to use finance for short-term needs, but we hope that people can use finance for their long-term needs as well. And then how are people meeting these needs? They're meeting them through social network and digital loans and mobile money wallet savings. Speeding right along to the third deep dive along climate, environmental risk, and financial inclusion. The 2021 survey added new questions to look at this issue that is of climate risk. And I think as many of our colleagues are at COP27 this week, I know this is all top of mind because climate risk is happening to Kenya, and the adaptation in particular needs are very high for Kenya. This chart I found these two charts I found very eye-opening, and they are comparing what the population density of Kenya was in 1962 versus 2019. You can see that has significantly increased. And what we see now is that 33% of the population is living in dry lands. And that means that they're climate risk affected populations, and as we know that there's a drought right now, and so that's 33% of the population dealing with that. And that really set the context for looking into climate risk. Camilla and her presented the research that she and her team had done around looking at climate shocks and the incidences and impact of those. There's a lot of information on this slide, but let me just draw your attention to that yellow arrow, where they were looking at are climate-affected populations using solutions to deal with climate risks. And what you can see is that in 2019, it increased significantly how many people were selling assets or livestock to deal with climate risks, which is a sign of stress. They also looked at whether how those in climate-affected populations are dealing with finance differently than non. And that yellow arrow is looking at mobile money, which is showing that those in climate-affected populations have increased their use of mobile money more rapidly than the general population. Perhaps it's more relevant because it's in remote areas where mobile money can reach and traditional finance has had more difficulty. Okay, we're in our final deep dive session. Is Kenya's financial sector serving women? And I had the honor of moderating the panel after this, and I think it's been great that we've heard from all the speakers today the importance of looking at that gender gap. You know, as we think about the policy implications of the gender gap, it's going to be great to be able to dig into that county level data on the gender gap. The first paper that was presented from Kenya Bankers Association, your colleague Kabil, is looking at, again, this county level data and trying to say, what does it mean for women across the different counties? I won't try to do justice to all of these colors, but if you, again, I've got the arrow down here. Dark green are counties that are actually doing better for women versus the light green. And so there may be some counties on there that surprise you in terms of better outcomes for women, even in those counties which sometimes are overall rather low. This is looking at some analysis about the correlation between financial inclusion and different indicators, and I just picked one, which is mobile phone ownership. And what you see is for both men and for women, the owning a mobile phone is highly correlated with financial inclusion. But for women, you can see that curve is much steeper. It is so much more important for women in terms of correlation. And on the flip side, that means that women without a phone are very unlikely to be included. Okay, moving on to almost the last paper. Thanks for sticking with me. And it's really looking at mutuals and the value of mutuals in the financial inclusion landscape in Kenya. And I picked this slide because I thought it was one that surprised me when I was looking at it. It's looking at those in a chama are much more likely to be financially healthy than those who are not. And this is especially true for women. So what is it about being in a chama that is correlated with financial health? Now, we don't know whether it's one that drives the other, of course, but we can look at that prevalence, and I think that it begs some interesting questions. You know, this is a session about deep dives, and I think the next step is probably around deeper dives. If we look at gender, when the team was presenting this, they said they wanted to bust the myth. I think a lot of people, when they think of chamas, they think of women. And there are more women than men using chamas. But in 2021, we still have 20.7% of men using chamas. So let's not kind of stereotype what a chama is. And as I keep going on to bust some myths, I think people also think of chamas as being the lowest income. But what we see is that almost a third of the highest wealth quintile are also using chamas, right? So this is something that is across all segments of the wealth quintiles, education, and many other livelihoods as well. One slide I didn't include is that the business owners are the most likely to use chamas and find them a valuable part of their financial portfolio. And this is the last presentation that was presented, and it was from the Alliance for Financial Inclusion. Again, lots of information on there. The reason I've put it up there is because I know that in yesterday's session, or actually it was day 2 session with the financial regulators, and yesterday we also had Communication Authority and Competition Authority. All of them were talking about the importance of adding not only demand-side sex disaggregated data, which Finaxis gives us, but also supply-side sex disaggregated data, which provides different information that we can get from the demand side and can provide insights about how we can close that gender gap that we've heard from KNBS at each county and across different financial service providers. So my yellow arrow here is pointed at do something about it. That's what we want to do. That's what this conference is about. It's not just about listening to interesting things, but thinking about what are the implications of those interesting things for policy and industry change. Thank you for your patience and sticking with me through this presentation. Hopefully it's not been too long, and it's given you a taste of what you've missed if you weren't here. It's reminded you of what you've heard if you were here. And it's invited you on the swim to go deeper into this data and use it for policy. Thank you very much. I don't see Wallace, so I'm going to ask my dear colleague from the Kenya Bankers Association to come and give his remarks, because he has been patiently waiting. He was supposed to be first on the program, but we decided we should save him for the best for last, right? Habil, please come.
Yeah, thank you very much, Tamara. It looks like I'm the one standing between you and your lunch, so I'll try to be as brief as I can. But thank you very much for this invitation. I should have gone through the protocols of acknowledging the presence of the CS and the governor and the rest of the team, but I've been saved from that because they left a little bit earlier. But nonetheless, I think I'll also recognize the presence of the representative from the Kenya National Bureau of Statistics, Mr. Robert Nderitu, who made a presentation here, and of course Tamara Cook, who effectively now is like our host. Let me first of all thank the Central Bank of Kenya, the Kenya National Bureau of Statistics, FSD Kenya, and of course the University of Nairobi for putting together this event and inviting KBA to give some remarks where we reflect on what information we can use to drive policy from the financial inclusion standpoint. I was invited actually specifically to speak on product designs and market reach using financial inclusion data. But before I do that, let me acknowledge that the theme of the conference, which is leveraging financial inclusion statistics for policy and creation of economic opportunities, could not have been any better, given the fact that we as an economy are at a stage where evidence should direct all our next moves. I'm happy to indicate that at the KBA, our mandate, let me say our core mandate, is to pursue evidence-based advocacy. For this, then, we are very much aligned. And in another word, they say, we are almost like in the same WhatsApp group. In 2019, and KBA has been collaborating with the FSD for quite some bit of time. And so in 2019, KBA, in collaboration with the FSD Kenya, organized a workshop for bankers to explore the opportunities for using the financial inclusion data in their design of the business strategies. At the time of the workshop, it was observed that, and these are data that we have already interrogated, we have come across, especially by from the presentation that was made by Robert a little bit earlier. It was observed that financial inclusion was rising, with the usage of formal financial services having risen from 73% in 2016 to 83% of the total adult population in 2019. And this extremely excluded, those extremely excluded from formal and informal financial services had declined from 11% to 8% over the period. And this was good. Also, it was noted that the gender divide was narrowing, with the formally included men and women proportions rising to 85.6% and 80.4% in 2019, up from 79.7% and 71.2% in 2016, respectively, which is also good. However, the gaps still were noted, especially in the bank account uptake and use of informal financial services. Also, the formal-informal divide in the use of financial services was noted to start at a youth stage as women enroll less in secondary schooling, taking up family roles, and thus invest less in their future, hence earning less comparatively. This disproportionately affects women's ability to access formal finance. And so out of this, the bankers were very keen to start designing products that appreciated the gender differences in approach to finance. The focus of the 2019 workshop was also narrowed down to the wealthiest 60%, a group deemed as the core banking population. Here, a number of interesting findings were again observed. The women and men in this category were noted to have similar goals and aspirations, particularly in the core areas of life: putting food on the table, educating self and family, improving career, and pursuing good health, and so forth. However, there were still gender gaps, particularly on the uptake of bank accounts, with 36.5% of men and 48.9% of women remaining unbanked. Additionally, 79.7% of men and 81.2% of adult women were able to save, as 54.4% of men and 50.4% of women were able to borrow. Fourthly, the women were more likely to save informally and less likely to put their savings in formal devices, especially banks, when compared to men. The same is true for borrowing. Women from wealthier segments who are much less likely to borrow from banks than men, but they would more likely get loans from informal groups. And now, interestingly, women are also more likely than men to seek advice from friends and family or chamas. Men are more likely than women to turn to formal financial institutions or the media. And I found this interesting because I was reflecting on it. When we came into the meeting room as we were waiting for this session, there was a story about a number of us who are coming to the KSMS after not having taken the Thika Road for a long time. We found ourselves going, turning around, and then come and passing KSMS, and you find yourself down. And then you have got to find your way back again and go around and come back. And I was reflecting on that in terms of this interesting finding about seeking directions or getting advice. Typically, a man would go, do a U-turn, and come back, and then go, get lost, and do another U-turn again, and continue. But a lady, simplest thing will be stop and ask for directions. And I think that's a defining difference between the way ladies behave and the way men behave. I think men are more of waji-waji, isn't it? Yeah. So at the end of the 2019 workshop, a few things were noted on the prospects that women have in presenting a good business proposition to banks from various ways. One is that they carry a strong promise to bring in substantial revenues through business, farming, and employment. They are more focused on savings than men. They have long-term interest in future investments like education, land, and housing, thus can create long-term relationships with lenders. Women generally are known to be more risk-averse when compared to men, and thus good agents in terms of driving down the non-performing loan portfolio in the banking system. So with evident financial inclusion gaps, there is a business case for supporting financial inclusion of women with their potential to support stronger profitability and lower NPLs for banks. Allow me to highlight a few empirical cases. One is that there was an IFC research in 2017 report on investing in women, new evidence for the business case, which demonstrates how IFC clients, including banks and agribusiness companies, have benefited from developing and implementing gender-smart solutions. The study shows that more than 34% of private sector lenders in developing countries report increased profits as a result of financial institutions' efforts to empower women in emerging markets. And in another study by the Global Banking Alliance for Women in 2016, the participating banks found that the non-performing loan rate for women, small business customers, was only 2.9% compared with men's, which was at 4.2%. So from the financial inclusion statistics, banks are able to understand and better serve customers through effective identification of new market opportunities, designing product offerings, delivering the offerings, and generally building loyalty. In identifying new market opportunities, banks are able to estimate the market size, clearly map out opportunity segments, and identify the unfulfilled needs. In terms of the design of products, they would effectively make use of use cases, adequately structure product features, and enhance the customer experience. On the delivery of products, banks are able to structure effective marketing strategies, pricing, delivery channels, and messaging around the product. And then finally, on building loyalty, banks are able to put in place strong incentives and rewards for customers and ensure customer retention for the long term. So in conclusion, the role of financial inclusion statistics in banking remains central, contributing immensely to core banking and in deepening our financial services sector. So going forward, and now with overall financial inclusion showing tremendous improvements, and we are keen to structure our conversations around the subject of financial health, to highlight the extent of utilization of financial services by the included population to meet their shocks. Thank you very much.
Thank you so much, Dr. Habil Olaka, CEO, Kenya Bank Association. Thank you, Mr. Malakuk, for dissecting and providing us a summary of the key deep dives that we have been having this week. And then thanks to Mr. Derito from KNBS for at least try to simplify some of the key findings that we have in our county report. So we'll go and try to dig deep on these particular reports. So I guess we have earned our lunch. We had a very exciting morning, high-powered. Now we need to relax for a little bit. We go for lunch. And then after lunch, we'll have a very exciting program. We'll have a guest lecture on frontiers of financial inclusion, delivered by Mr. Asad Alam, who is a regional director of Eastern and Southern Africa Equitable Growth Finance Institution at the World Bank. And because of time difference, Mr. Alam is in Washington, D.C., so we shall have the lecture at 15, that is at 3 p.m. However, I will request you to come back because our director, Dr. Robert Budida, will introduce the lecture. So let us be back by around 2:45. And I wish you a nice lunch. Thank you so much.
Haya, kwa majina naitwa Penina Wahu kutoka LD, but nakaa hapa Kawangware, ndio nimeweka biashara ya salon hapa Kawangware. Kenye naona inanisaidia na hii biashara yangu ni mambo na chama za wamama. Chama za wamama zinasaidia sana sana. Kama umelemewa na business, wanakuja wanakuinua. Kwa saa hizi mimi niko na chama 4. Mimi nimeona hizo chama zimenisaidia juu kama hii ya utugi. Tunaendanga kutembelea wazazi. Kupitia hizi chama za wamama tumeungana. Mtu akiwa na jambo, kama umelemewa, kama uko na ugonjwa, wanakuja wanakutembelea. Hapo awali nilikuwa na circle, but nikakuja nikaona afadhali nikuwe tu kwa hizi chama za wamama kuliko circle. But nikaona chama za wamama zinasaidia juu nikitaka kitu emergency, naenda tu kwa chama nawaambia, alafu kama ni kitu kunisaidia kama pesa kidogo tu ya kuinua biashara yangu wananipatia. Hata kama sijaweka stock ya kutosha kwa kazi yangu, lakini natarajia nitaweka ya kutosha kupitia hizo chama. Tena nawakopa kidogo kidogo na kuja naendelesha biashara yangu. Kuna watoto 2, mmoja ako class 7 na mwingine ako class 1. Na kupitia hizo chama za wamama, at least sijaiona mtoto wangu amefukuzwa. Mi kulingana na kwenye chama zimenipeleka na kwenye zimenifikisha, mi sioni maana ya bank ama circle. Mi nategemea, naona tu afadhali tu nikae na hizi chama za wamama. Juu kwa bank tuweka pesa, umeweka, lakini at last maybe kama unataka loan itabidi ufuate procedure kubwa. Sasa mi sioni kama naweza fungua any circle. Acha niendelee tu na chama za wamama.
My name is Kevin Mulwa. I sell suits in town. We've been in this business for the last 10 years, much experience, challenges here and there. There has been challenges like you save with the bank, then when you go for loan maybe to boost your business, you think you get they want so much. I had another bank which I used to operate here in town. They add so much hidden charges where you find when you are getting your statement, you get they have charged you so much. Hence, when you go back there and you ask, they have no answers. You are taken from one manager to the other. You are told, come tomorrow, we'll sort you out. And it was very frustrating. Most of the banks we get, you'll find people who are employed there, like they don't have information. Maybe they have the information, but they are not willing to give out the right information because they want to sell fast. They want you to open an account with them and they have been given targets. So the information which they give you, they'll give you information which will make you open the account. Basically, we need to get the right information right from the start when you are opening the account, so that you get to know where maybe there are some deduction of your money at the end of any transaction.
Majina yangu naitwa Nancy Wanja. Mimi ni mwanabiashara wa Githurai. Mimi ni muuzaji wa minji, ni wholesale na retail. Kuna challenges zile zinapatanga watu kwa biashara. Sometimes unakuta biashara imeenda chini. Saa nyingine unakuta biashara inaenda juu. Kwa hivyo wakati biashara ziko chini, ndio tunahitaji mikopo ya hapa na pale. Tunaenda kukopa hapa na pale. Unakopa on daily basis. Mimi nikilinganisha pesa ya banki ama ya sako. Kwa sako interest ya chako ni kidogo sana. Lakini kwa bank unakuta saa hii wamekupatia a loan of 100,000, lakini unakuta umelipa kama 300,000. Lakini kwa sako haikuangi na faida kubwa sana. Kwa hivyo na prefer sako instead of bank. Sababu nikienda kwa bank kila mtu atakuwa anajua mpaka nitaitishwa maseginitors wa kunisainia, lakini ya talama ya M-Shwari haitisi seginitari, haitisi mambo mingi. Kwa hivyo mimi naenda tu na nikukanyakanya tu kwa simu alafu pesa inaingia. Kwa hivyo tumefurahia sana mambo ya Tara, mambo ya M-Shwari, KBC. Those are the quick means of mikopo ile tunapenda sana.
regards to payments, we're able to accept M-Pesa payments. So for this course, we realized that we're able to get a lot more money because people don't always have carry cash around with them. And over the time, yeah, I mean, I don't have to go to the ATM at all. I even have an ATM card that I will only use because it's a Visa, I used to pay bills. I don't really use it to access money. When I need to get money, I'll just go onto the line, I'll use my phone to go onto the online mobile app and access money. And this definitely makes things easy. And well, so far, individual clients also pay us using mobile money, so still very good. The bigger clients, of course, will pay by bank transfers or by check, so that means those have to go into the bank account. Yeah, I think the banks need to be more friendly or come up with something that, because for us being a partnership, when I need to get money, I still have to physically go into a bank because I have to walk in with a check that is signed by both signatories. We cannot have an ATM card because this is a partnership. So I think the banks should consider doing something. I think mobile banking has helped increase in terms of volumes because sometimes there are people who, when they walk in here, the first thing they will ask is, do you have a till? So in that case, there are people who will comfortably come in because they know that they can pay by M-Pesa even if they don't have cash. Because as it is right now, there's so many requirements and so many small prints that banks require before they can actually give you even the minimum of loan, regardless of the fact that you have lots of money with them. So getting an overdraft facility is close to impossible. So I hope that this initiative is going to help them understand our needs so that they come up with a product that will help us.
Naitwa Paul Suyanka na niko na miaka 29. Niko na watoto wawili. Mmoja shule, mwingine bado hajaingia shule. Mimi na savingi na natumiaga Equity, lakini sijapata pesa ya kusave. Ningependa kuanzia biashara, lakini sasa ndio naanza kujipanga nipate pesa ya kuanzia biashara. Mwaka uliopita singeweza kusave ama kujipanga kwa vile niligonjeka na ikawa matumizi yangu yote yameingia kwa gharama ya hospitali. So ile pesa nilikuwa nimeweka yote ilitumika. Kwa hivyo saa zingine life inakuwa ngumu. Kama uko na familia, ukigonjeka, unaweza tumia pesa vile ukuwa umejipanga. Yeah. Lakini kulingana na vile umejipanga naona itarecover tu. Nitarudisha ile mali nilipea ama ile pesa niliyotumia. Kufanya kwa kusave na kwa kuweka kwa bank, nipate kuanzia biashara. Sijaitumia Tala, M-Shwari kwa sababu wanapatiana loan kidogo, mkopo wa chini sana ambaye haiwezi anzia biashara yoyote. Sijaipata kuchukua loan kwa banki yoyote ile ama kwa Equity kwa sababu ya inahitaji mtu ambaye ana save ama anapata pesa kila mwisho wa mwezi. So sijawahi fikiria kusave na kuchukua loans.
My name is Boniface Kithara Kimathi. Okay, I'm an entrepreneur at Kangemi Business Center where I have a cyber cafe. To start my business, I started with my own capital, and towards growing the business, I decided to take some loans from Tala, from KCB M-Pesa, after which it wasn't enough. I decided to partner with a savings circle that I had been since 3 months ago, where I took a loan of 80,000 and added up to my capital so that I could rent a house where it's strategically accessible by my customers. These loans, first of all, the one I took from Tala, I borrowed from KCB M-Pesa so that I can pay it because the period was almost. Actually, I like betting a lot. I love football, and I like placing my bet, even though I don't know the results which will come after. The little profit that I make, I take at least even 50 bob, which I take into SportPesa. and at least see if I can get some casual money to juggle in between my other responsibilities. For the medium loan givers, they should reduce how they pressure a client to pay that money. Sometimes business is bad and you cannot be sure that you'll pay within that 1 month. Banks give the loans, but the process of processing the loan is like too much. The processing of the loan is too much. You have to be told to bring how many guarantors, and the interest rate, I find it so high than SACCOs and these other small scale loan givers.
The role of FSD Kenya for HSNP was that of a payment service manager. And that included, to start with, the design of the payment solution. So both in the first phase and the second phase of HSNP, FSD was the one designing the payment solution.
The role of FSD in developing a solution for HSNP began with what I would call a challenge from DFID, where they asked us to place $20 in the pocket of a person in Turkana on a regular basis every 2 months, and to make it affordable. What we did was we set up what today is known as agency banking. At that time there was no agency banking in Kenya, but with a special dispensation from the Central Bank of Kenya, we're able to set up an agent in Turkana, in Kakuma, and we registered about 500 initially beneficiaries using biometrics, because we wanted to make sure that we were able to positively identify and authenticate the individuals or beneficiaries who are receiving these funds. And also we wanted to make sure that this was a process that could be used by people who are not literate. We then went out and advertised for a payment service provider, somebody to come in and help us to roll out the solution. And out of about 18 applications, Equity Bank emerged as the best candidate. So we're looking for a partner who was really keen to work with the bottom of the pyramid and to continue to develop solutions for the people of Northern Kenya.
In terms of payment processing, FSD Kenya was responsible for just making sure that the payroll was in order, coming from government, and making sure that the funds that were coming from FCDO and also from government in the second phase were processed in good time and delivered in good time. There was also another role around SLA management, that is the service level agreement. These are agreements that were part of the contract, and FSD's role was to ensure that these had been maintained by the payment service provider, both from a beneficiary point of view and in delivery of the payment. One of the things that we did was to do a beneficiary satisfaction survey, basically going out to beneficiaries and asking, are you satisfied with the service that you're receiving? From the payment service provider side, we were to ensure that the payments were delivered in good time, accounts were opened in good time, cards were delivered also within the framework that we had agreed on. Some of the key design principles that we took into consideration, especially in the design of HSNP, were one, predictability and timeliness of payments. In a program such as a cash transfer program, it's important that you get the payments out on time. So in the case of HSNP, we were able to pay on the 5th of every payment month. Another key design principle, I'd say, is keeping personal data of the customer private, especially in the age of internet, where some of this personal data can be misused for fraud or other things. It's important that you ensure that this is covered. The other thing is accessibility, ensuring that beneficiaries are not walking long distances to get to a payment point was key for us. There was an SLA requirement around making sure that 80% of beneficiaries lived within 20 kilometers of a payment point. which was adhered to.
Hawa mama wakifika, ako na ATM card na kitambulisho. Kwa hizi zote mbili unahakikisha majina yenye yako kwa kitambulisho na yale yenye yako kwenye kadi ya ATM zinafanana. Kisha utachukua kadi uingize kwenye mashine. Ukishaweka itakuitisha kidole. Utachukua kidole chake uegeze kwenye mashine. Kisha ita verify. Kisha verify utaweka pesa. Ni shilingi 5,400. Kisha toka utamlipa pesa. Kisha tuko na kitabu ya benki, unaandika maandishi. Utaandika majina yake, ile pesa amepata na kuna na hiyo transaction.
Pesa ikikuja, agent inapiga simu. Wanasema wenye wanapatanga pesa ya Lopetuni wanatakana wapate pesa tarehe fulani. Chief kwanza ndio anatangulia. Nasema pesa ya Lopetuni imekuja, itapatikana tarehe fulani. Agent anasema msanya watu wote wakuje tarehe fulani wapate pesa. Nilikuwa napokea 4,000 sijui na 100 ngapi. Alafu wakarudi tena wakaongeza. Saa hii tunapokea 5,400.
Some of the challenges in implementation of the HSNP program is about the IDs, and we saw this when we were opening bank accounts in the second phase. Once we set out to open the bank accounts, we realized about 40% of the beneficiaries did not have IDs, and that sort of set us back in terms of our work plan and in opening those accounts. One other challenge is about getting viable agents at the time when we were starting, because the businesses were quite small, and depending on the amount of money they were paying out, then that could be a challenge. So that was an issue, but currently we have about over 500 agents across the 4 counties that are serving beneficiaries.
The program has had very positive impacts. Each time there's a drought, the household lose assets and poverty increases in those households, because now you've lost your sources of income, livelihood. In the households where we have this program going on, the poverty did not increase as much as it did in the other households that were not benefiting. Regardless of whatever was happening, the shocks and all this, at least they could eat. They could have something to eat because they had cash, they knew the cash was coming, it was predictable.
We have seen economic impact to our vulnerable households. The money that the household gets can utilize from other things. The household can buy foodstuffs. The household can purchase medical supplies for ill household members. The household can venture into small-scale businesses. And that has brought a shift from dependent population to what I may call resilient.
Hii pesa nimefungulia naye kibanda. Nimeweka mabasta, nimeweka unga, nimeweka nini, kila kitu tu iko, hata peremende. Hii pesa inasaidianga saa zingine natuma kwa shule. Saa zingine kama maneno ya shule ijokuja nanunulia vitu naweka kwa duka.
Evidence shows us that providing cash is actually between 2 to 7 times more efficient than providing food assistance or food aid, which was one of the key objectives of the program at the very beginning. Cash transfers have also been shown to have wider impacts, including on supporting the local economy and supporting the local markets and small traders within the communities that are affected. Use of cash has been shown to preserve dignity of the individuals or the beneficiaries, and has been also shown to have a very positive effect on their mental well-being during a crisis.
Mimi, huu mradi umenisaidia sana. Kuna ile commission mimi napewa baada ya kulipa hawa mama kila tarehe 6. Nikienda kule benki na nashukuru Mungu kwa sababu imeniinua. pia imefanya biashara yangu imeimarika, kwa sababu wakati nilianza kama ka kiosk kadogo, kati ya watu wanapata pesa they buy. Wamefanya sasa niko saizi na duka 2. Pia imenisaidia kwa sasa ninauza retail wholesale kutoka kwa kioski na kupima sukari ya shilingi 10. Saizi naweza pima gunia niuze nusu gunia, niuze quarter ya gunia.
Since phase 1 of cash transfer program, a lot of lessons have been learned. There would be need to complement cash transfers with capacity building. Cash payments are not sufficient to transform people. They solve instant problems, but if we did capacity building, then we could put the beneficiaries on a path of self-sustainability.
So in terms of lessons learned is having the community support the project, because initially when we went into northern Kenya, there was a lot of resistance initially to the program. So we brought in, I would call them local elders, etc., to talk to the communities. And once they spoke to them and we got their support, that changed the perception of HSNP.
Sustainability was a key success for us. The original intention was that once FSD exits the program, that the program will continue running. And this has been the case after 2 phases of running or implementing, being part of the project as a payment service provider. We transitioned successfully to National Drought Management Authority, which is now the program or the agency that is running the program, and it's doing so successfully.
Namwambia hii watu asante sana 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 sana. Mwambia hao asante sana. Kama wako na uwezo ya kusaidia tu, tena aongezee sisi pesa, aongezee.
name is Caroline Gina. I'm an entrepreneur. I run a cleaning company called Miss Clean, where we specialize in professional cleaning services, both domestic and commercial. We've been in business for the last 13 years. As a business, we run a lot of transactions that are money related. When we started, I remember mostly the biggest mode of payment was checks, especially for corporates and individuals that could pay us via cash. Looking at the involvement of money handling and transactions has changed, and mostly even when COVID happened. I remember there was a big shift from cash handling to now more of online transactions. And most of my clients ask for bank details, and they currently do transfers, especially the corporates. They do just bank transfers. That walking and walking out of a bank was like something we had to keep doing. But these days we don't have such things. It's just at a touch of a button, either on your phone, on your laptop, and things are just happening. So that has even helped us as business people, such that we don't have to wait for money. I remember I used to go to the bank to ask them to give me an uncleared effect so that I can do my next job, especially when business was really still struggling with cash flow. But now, instantly, you have your client pays, and instantly you have your money. We do internet banking from our main account to mobile banking. When it's transferred to the mobile banking system, then it's transferred now to every employee. That has created a lot of efficiency, because the person paying doesn't have to go to the site where our staff are working from. It just at a touch of a button, or while they're just seated in the office, they can easily pay people, pay them timely. By the time the work is ending, everyone has their money and they can access it and go home. A big part of our transaction, especially receiving payments, involve a lot of the domestic part, where clients, we serve them on a daily basis and they have to pay us on a daily basis, not waiting at the end of the month, like the corporate clients. So most of them use mobile banking. We actually cancelled cash payments years ago. We no longer receive cash as a company. We only operate with mobile banking. Internationally, we also procure mostly our machineries, because it's easier, of course, and cheaper to get them there. Once we've settled with a supplier, we go to our bank and we give them the supplier's details. Sometimes the bank also helps us also get to know the credibility of the supplier and all such details. And then they help us do now the bank transfer, which is all, again, instant. And once it's done, we have the transaction evidence, which we send to our supplier, and our supplier is able to just send the materials and machinery to us within our time. So yes, that has helped us a lot. We don't have to go through so much changing money here, taking the money, or picking the money in cash, or carrying the money in cash, which evidently would lead to enough times, loss of cash.
FSD has been working since 2005 to promote financial inclusion in Kenya. Kenya has made huge financial strides during this time. Over 75% of the population have access to a formal account, even if it's just a mobile money account. But are formal financial services really delivering value to low-income Kenyans?
My business partner and I went to the bank and we asked the manager if he could give us a loan, and then he asked us how much we needed at the time. The manager asked us if we have exhausted all our other options, if we've asked family, if we've asked friends before, because he was he wouldn't advise because of the interest rates and everything. So he was no, if we don't get anywhere else, now we can go back and he can see if we can get. Okay, it was a bit disappointing because I thought we bank with you guys, probably you'd give us a good rate or something, considering you can see how our account has been growing. After the first experience, it was a bit discouraging, so I'd rather I feel like I should just look for other options before I consider them as an option. So far I haven't gotten any loan from a bank.
Despite these achievements, our research shows that the relevance of these financial services in the everyday lives of Kenyans is minimal. So why is it that Kenyans just are not using banks?
Well, I think that's a really good question, because although we've seen the numbers of people having bank accounts go up, what we know is that they don't use them so much.
Yeah.
And I think, again, it's about the fact that when you put your money in the bank, it's not being put into this enabling you to build friendships, to build relationships. People would love to have a relationship with the bank, but then they find that it's really hard to get a loan from the bank.
Right.
And if they do get it, then they find it really hard to manage it because maybe they've had some crises and the bank won't really listen to them when they need to change
not as flexible.
Yeah, and therefore that puts them in more of a problem than when they started.
What happened now, we had to go back and now ask like our family members for money. So now I was lucky enough, my mom assisted, also my dad gave me some money. Luckily it was interest free, so I'd pay them slowly. Yes.
Unajua sina kazi ingine, kazi ile nafanya ni yangu ya mechanic. Saa hii nikifanya kazi hapa, tuseme nimepata 1,000, 500 naweza kwenda ni save kwa hiyo chama yangu. Hiyo inaitwa Best Rock Sacco. Juu na hao watu huwa wanapitianga hapa wakicollect hizo pesa, badala uende huko bank ufunge line huko na kenye unaenda kufungia line unapeleka 500. Sasa nikaona hiyo chama yangu wewe inafanya mzuri, na kila siku wakipitia hapa, tuseme hata niko na 200, niko na 100, na wapatia na wanachukua, na hiyo pesa wanaenda wanaweka, na hiyo pesa ni yangu. Hiyo Best Rock Sacco ukiwaitisha tuseme loan, unataka loan, wanakupatia tu, hawakuangi na process mingi.
There are two really important realities to understand about low-income people's lives, and one is that their incomes are really, really small. So whenever they need to spend money for one thing, it means trading off with another. So the incomes are really tiny. And we also saw that they're really volatile. So from month to month, income goes up or down by about 50%. So that's very difficult to plan around. And we also saw that people were very rarely just putting money aside in a savings account or under the mattress even in large sums, because they needed every shilling to be working. It couldn't just be sitting there. To just leave it sitting there would be wasteful. So they needed that money constantly working for them, whether that was in a savings group, where when it wasn't with them, it was with a neighbor who was making an investment. There were lots of different ways that they wanted that money to be active at the same time as it was being saved.
Hii familia yangu mimi utegemea hii biashara ya nyama ndio wasaidia nayo. Mbuzi natoa sokoni, naenda sokoni nanunua mbuzi, nakuja nazo napeleka kichinjioni, naenda kuchinja, nikichinja nakuja nauza. Mbuzi anaweza kama ni wa 3,000 anatoka kama 4,000. Sasa zile pesa nikipata nikichinja wale mbuzi wakiisha, zile pesa narudisha tena sokoni. Zile faida ile napata napeleka kwa chama. Capital ya kazi narudisha tena kazini. Kwa kucirculate namna hiyo inaenda ikizaana faida ambayo naiona. Ndio kwa banki ni sawa, sikatai. Lakini hii naiona nafanya kazi na immediately.
People have sort of two competing priorities that come out of that. One is stretching their budget to make it work when income is low or something comes up that they weren't expecting. And the other one is growing their incomes so that they're investing in a better future, whether that's in an actual income earning activity like a small business, or whether it's investing in school fees or buying a piece of land. And when you have such a small amount of money to use in terms of savings, you have to be really creative about balancing those two priorities of stretching the budget and growing your income. We found that people were using lots of different financial devices at the same time to try to make those two priorities work together. So they might be taking credit at the shop, borrowing formally and informally, belonging to a number of savings groups. We found like more than 10 in a household that were happening simultaneously.
Mimi ni fundi, sana sana huwa nashona na mapato yangu ndio ninajisaidia nayo kutoka hapa kwa kibanda yangu. Huwa ninaingia kwa vikundi vya kina mama. Ninatoa tu kidogo kidogo, baadaye nikipata huwa natoa karo ya shule, nanunua chakula, mavazi, najisaidia. Sasa si unaona vile nilikiweka kwa vikundi vya kina mama, za zingine watu napeleka bank, alafu sikikuja kwa nyingi tunakuja tunagawanya.
Chama niko na 2. Ya kwanza natoa 200 kila siku. Na inanisaidia mimi kulipa nyumba ama kulipa school fees. Hiyo ya pili nachukua naangalia biashara venye inaendelea. Nachukua doko napeleka bank.
Which of these services do you value the most? The bank or the chama?
Chama. Ndo napata pesa haraka haraka. Ndo napata pesa kama pesa ni mingi.
When I did research, I found that Kenyans value financial services not just for what they can get in economic terms, but as we said, also for them to fulfill other well-being goals and well-being values. And actually, respondents and people I talked to say that they can have a lot of motivation in terms of saving in the bank and also in terms of planning for their expenses. But at the same time, it's very difficult for them to build relationships through the bank. So while the banks can give them a sense of social status, it's very difficult for them to actually build a sense of identity and belonging, because through a bank account, they can't really develop relationships and social networks. And at the same time, also, banks don't seem to operate on those modes of development that are typically in communities, so the mutual development and mutual support, because it's not clear when people put their funds into banks whether they can actually get these funds to work for their community through, for instance, loans.
Uplifting a friend means you cannot just focus on yourself. For example, sometimes a member of the chama may not have any money and she may not want the whole community to know she is struggling. The chama can help by supporting her so that people don't know what she is going through. That's how we run things. We agree not to expose each other's challenges to people outside the chama. We can't do that for people who aren't members of the group, but if they are members, then we are able to assist. So by sheltering one another like this, we cover each other's nakedness in times of need.
Tawaambia waingie waungane, waanze vikundi, watoe pesa, wakiunganisha pamoja wapate kitu ili waanze kazi.
And I think Mshwari is really interesting in the way it's come up, because of course it has got a bank behind it, but it's got a very different identity. Yeah. And what people are seeing with Mshwari is that they can take loans, they can learn about it, but they're seeing that the Mshwari is trusting them with their money. And I think there's a perception in banks that the bank doesn't trust people
the client
with its money. You have to trust the bank with your money before it will trust you with its money. And Mshwari is slightly doing that the other way around. And that's partly why it's very popular. So it's building a relationship which people start to value, because they want to be able to build that relationship and able to develop in the long term. They want a relationship which is around finance that can take them into the future.
Watoto wamesoma, niko na kijana amemaliza, niko na msichana pia, kijana amemaliza college na ameanza kujisaidia mwenyewe. Niko na msichana amemaliza last year, pia amemaliza form 4. Na pia niko na mwingine mdogo naendelea na mimi na bwana yangu.
If formal financial providers want to develop solutions that work for people, they need to come out and talk to people. There is a lot to learn.
M-Shwari is designed for the people on the move.
mobile technology has made our work to be more easy than it used to be.
In fact, the mobile money has transformed the way we work.
The purpose of this research is really to understand the use and the impact of M-Shwari amongst the Jua Kali sector in both rural and urban Kenya.
The word Jua means sun, and Kali, the hotness of that sun.
It signifies the informal sector in Kenya.
Jua Kali is 90% service industry. We're talking of masons, we're talking of plumbers, we're talking of all the artisans.
The Jua Kali sector is very critical to Kenya.
It is the one that employs so many people every year.
About 19 million people are self-employed in the so-called informal sector.
The only way we can provide solutions to unemployment in this country, which is a serious national problem, is by expanding the Jua Kali sector.
Before the mobile telephone came along, the bankable populace was very, very little.
For a long time, the traditional system has been walking into banks physically.
Some of us who had accounts would walk maybe from Kaloleni to Mombasa, 44 kilometers, just maybe to make one transaction.
This in itself cuts out quite a segment of the population out of the banking services.
There were many difficulties for artisans. Opening an account with maybe Standard Chartered or Barclays, it was very difficult.
M-Shwari, I can just say, is an idea that came at the right time.
It's a product that has been developed by Safaricom,
which allows people to bank electronically and to access credit electronically.
It's really to help provide access to resources, small loans, and also access to savings for many small and medium-sized businesses.
Like us here in Jua Kali, there are things which we shop in small quantities and within a very short duration. And you know, in that short duration, you can't go to your bank in 2 times in 1 hour. But with this M-Shwari of yours, it is very easy.
Instead of taking my 5,000 shillings to the bank to deposit in my account, the account is here. You don't have to move.
Nowadays, I've reduced team saving at the Equity Bank because of time. After working here, I get money, I just deposit in the evening at the M-Shwari.
You can borrow money from M-Shwari in cases where you need money to improve your business.
You'll just go borrow some money from the M-Shwari, you give an amount to pay with a very, very low interest anytime that you're short of money.
There are a lot of people who would like to use M-Shwari, but sometimes the basic understanding of the product is not there.
It's a very good service, but I don't know how to use it.
To myself, I do understand it's like an account, but I'm not all that sure.
Most of us don't understand exactly the transactions that goes on through M-Shwari.
That is what I want to know. What is M-Shwari? What is it for? What are the benefits of it?
The biggest challenge is that of loan.
The conditions, they are not very easier for small earners to borrow.
They don't tell us how much money you have to put in that account to qualify how much money to borrow.
Among some of these challenges is a lack of adequate awareness.
They don't know who is the owner of the M-Shwari, whether it is Safaricom
All commercial Bank of Africa, they don't know.
How is this link between this central bank and M-Shwari?
The product is good, but it needs follow-up.
Safaricom and that other bank, they have never taken that active role of promoting M-Shwari in the Juakali sector.
But if I'm explained more about it, I'll get more interested. It might be a benefit to me.
Most of the people here want to register in M-Shwari, but they don't know the process.
Many of the mobile money services are available in urban settings, and they're often more understood in urban settings. The people in the rural regions often don't have as much access to financial institutions and resources.
Most of the technology is in English, and most of these people do not understand that language.
What we hope that will come out of this research is that the findings will help encourage service providers and policymakers to ensure that the practices they have in place and the policies they have in place really engage the Juakali sector more in the Kenyan economy.
I wish M-Shwari would either be translated in a vernacular language or maybe in Kiswahili, where majority of this community understand it better.
Safaricom or its agents need to move to the grounds and explain to the people how to use these facilities.
Nobody could think that you could do business through the phone. It has really transformed lives.
The saving with the M-Shwari gives you a solution to your financial needs.
M-Shwari with the other modifications and improvements can be taken higher than what it is doing right now.
This anthropological project had as its first objective trying to understand how people use mobile phones here in Western Kenya. M-Pesa is a mobile money sending service that was introduced in Kenya in 2007. Since then, it has become extremely popular. Many development economists approach the study of mobile money from a financial inclusion perspective. This project takes an anthropological approach. It sees the practices of mobile money as a part of an existing social and cultural background. This area is a rapidly changing but still predominantly rural area. People are involved in agriculture, but also many other ways of making a living. Trading, having small shops. One important source of income is mobile money remittances. Remittances have a variety of purposes in Western Kenya.
Ebulwale nalwala eja nanyolekhana nda accident mala omundu wandumira chisende narumikhila kabajapu niye wandumira mala chanjenda.
Kama ukitaka kununua ng'ombe ama kujenga nyumba, ani shughuli kubwa kubwa, ama mtu amekosa school fees, unaweza kuenda ukatransfer ukamsaidia.
Remittances have economic uses, but they also have important social meanings. They express caring and create relationships based on the exchange of assistance.
When I'm just feeling good and I have a little money, then sometimes I'll send it to something to my grandmothers.
For urban or international migrants, they are a way of maintaining social relationships and social presence in a community. There's an interesting duality to the mobile phone. On the one hand, mobile phones create connections and relationships.
I think M-Pesa has made relationships stronger, and they help you save on time and energy and money.
On the other hand, mobile phones also highlight the ability of individuals to create and shape their networks. They give individuals a lot of autonomy or agency in shaping their connections with others. People use mobile money to participate in groups.
Through mobile, it's easy for people to send their monthly subscriptions or contributions.
A quarter of the money that is contributed in steering committees when we have funerals is by this.
This concept of money pooling has become very, very common, and I found it to be widely used amongst siblings, family groups, but also students. In order to understand how money circulates in groups, I've been using social network analysis to actually draw the pathways of mobile money remittances in families and groups. As an example, Sarah is a Marigoli woman living in Kimilili. Her mother was the third wife of a polygynous man. At his death, the other wives chased her mother away from the homestead. They moved to Kimilili, where Sarah's older sister Joyce married a Dutch man. Joyce now lives in Holland and sends Sarah $200 to $300 each month. She uses the funds to support her friend and fellow seamstress, Cecilia. She also sends remittances to her brother, her mother's brother, and her mother's sister's children. Her 20-year-old niece, Flora, attends an accounting college. Flora receives the most remittances in this network. She receives money from her mother, her aunts, and her uncles. Using mobile communication, individuals like Sarah can shape networks based on dormant kinship ties and on the existing importance of siblings in Kenyan families. The project drew mobile money graphs for 14 families. This allowed us to examine the main properties of the networks. They are based around groups of siblings. They are often connected to other groups of siblings by relationships of descent or marriage. Men and women participate equally in these networks, and people of all ages and genders can become central in networks. Furthermore, these networks are dense. Individuals have many connections to other individuals. These are properties that maximize the distribution of mobile money across a family group. They represent the way long-term traditions of mutual support and reciprocity are now expressed through the medium of mobile phone use. One thing we found was that women tend to receive a lot of remittances. Just because women receive a lot of remittances doesn't necessarily mean that they benefit from them in ways that we expect.
I know my grandmother, she has many friends, and they'll come to her for help. They'll be like, my sons are not working and I have this problem, can you help me out? So they'll be like reaching out to her for help.
So the ethic of generosity also places pressure on people to recirculate remittances to a certain degree. The individuality of mobile money and mobile phones often means that the secrecy, the privacy, and the exclusion that is allowed by mobile phone communication is very important.
People use their phones as a way to shut out people that they don't want to talk to.
People try to manage their participation in these groups that circulate money by turning off their phone. In an extreme case, you could even get a new SIM card, which is often taken to mean that you want to sever contact indefinitely. We met many people who complained about the ability of mobile phone connections to disrupt other important social relationships.
A husband may beat his wife because of the phone.
mobile phones have caused marriage breakages in our country.
Mobile money has empowered individuals to create a networked self. In so doing, it has allowed individuals to create new connections, but also to sever connections. Social life in Kenya is being dramatically changed by the use of the mobile phone, as individuals create more control over the social connections that they produce and participate in.
My name is Caroline Gina. I'm an entrepreneur. I run a cleaning company called Miss Clean, where we specialize in professional cleaning services, both domestic and commercial. We've been in business for the last 13 years. As a business, we run a lot of transactions that are money related. When we started, I remember mostly the biggest mode of payment was checks, especially for corporates and individuals that could pay us via cash. Looking at the involvement of money handling and transactions has changed, and mostly even when COVID happened. I remember there was a big shift from cash handling to now more of online transactions. And most of my clients ask for bank details, and they currently do transfers, especially the corporates. They do just bank transfers. That walking and walking out of a bank was like something we had to keep doing. But these days we don't have such things. It's just at a touch of a button, either on your phone, on your laptop, and things are just happening. So that has even helped us as business people, such that we don't have to wait for money. I remember I used to go to the bank to ask them to give me an uncleared effect so that I can do my next job, especially when business was really still struggling with cash flow. But now, instantly, you have your client pays, and instantly you have the money. We do internet banking from our main account to mobile banking. When it's transferred to the mobile banking system, then it's transferred now to every employee. That has created a lot of efficiency, because the person paying doesn't have to go to the site where our staff are working from. It's just at a touch of a button, or while they're just seated in the office, they can easily pay people, pay them timely. By the time the work is ending, everyone has their money and they can access it and go home. A big part of our transaction, especially receiving payments, involve a lot of the domestic part, where clients, we serve them on a daily basis and they have to pay us on a daily basis, not waiting at the end of the month like the corporate clients. So most of them use mobile banking. We actually cancelled cash payment years ago. We no longer receive cash as a company. We only operate with mobile banking. Internationally, we also procure mostly our machineries, because it's easier, of course, and cheaper to get them there. Once we've settled with a supplier, we go to our bank and we give them the supplier's details. Sometimes the bank also helps us also get to know the credibility of the supplier and all such details. And then they help us do now the bank transfer, which is all, again, instant. And once it's done, we have the transaction evidence, which we send to our supplier, and our supplier is able to just send the materials and machinery to us within our time. So yes, that has helped us a lot. We don't have to go through so much changing money here, taking the money, or picking the money in cash, or carrying the money in cash, which evidently would lead to enough times, loss of cash.
Kwa majina naitwa Penina Nashipai. Mimi ni mkazi wa Kibiko, Kajiado County. Mwanzo nilikuwa nafanya kazi ya beadwork, kushona shanga napeleka Masai Market. Wakati corona ilipoanza, ikawa ngumu sasa kwenda Nairobi. Nikakaa nikafikiria, nikasema ni biashara gani nyingine yenye naweza kufanya kando na hiyo. Nikaangalia, nikajaribu kuona kwa hii eneo yetu hakuna duka. Nikaanza kaduka kadogo. Customer wangu wengi wanalipa kupitia simu, na inawarahisishia pia na wao, kwa sababu kama mtu ako na pesa kwa simu hata lala njaa. Katika boma yangu niko na mbuzi, na pia hao ninawalisha kwa kununua unga, na si lazima nitoke nyumbani niende ninunue. Ninaweza lipa na kupitia simu, na ninaletea hiyo chakula ya mifugo yangu hapa nyumbani. Wakati ninatumia simu kulipa, inakuwa rahisi kuliko mimi kutoka hapa kwenda pale. Hapo kitambo ilikuwa ngumu kidogo, kwa sababu huenda nitakuwa nimesafiri, nimeenda mahali ambaye hakuna bank, na itakuwa ngumu kwangu kusaidika wakati ninahitaji pesa kwa uharaka. Sasa ninaweza toa pesa pali popote bila shida. Kwa kulipa karo, hapo kulipa na simu imetusaidia sana. Wakati mwingine tulikuwa tunaenda shule ikifunguliwa, tunakuwa na laini kubwa ya kulipa school fees. Unaona mtoto amechelewa kwenda shule, lakini kwa sasa imerahisishwa, kwa maana unaweza toa pesa kwa simu na ulipe school fees ya watoto na waende vizuri shuleni.
Kwa majina naitwa Susan Okol na ninafanya kazi ya samaki. Hii kazi nimefanya kwa muda mrefu. Sasa hivi niko na 15 years kwa hii samaki. Naenda Kikomba very early in the morning. 4:30 nishaamka kwa nyumba. 5 alafu tunalipa na simu. We don't pay cash. Saa hii biashara ya samaki ni mzuri na kutumia simu. Nimefurahia sana simu. Juu nikiuza na save. Inanisaidia tu kusave. Saa hii tu nikiuza tu hivi naweka kwa nini kwa savings. At the end of the day ama at the end of the week unapata umesave mingi sana kwa simu. 0710 75 Brand Muvea. Asanti. Nina save pale nimekaa. Na save hata nikitembea, na save hata nikilala. Nikiamuka hivi, natoa pesa, natumia Kikomba. Hata kama sijafika Kikomba pesa yangu imefika hapo. Mimi nikienda napata tu samaki yangu. Pesa inaenda mbele kuniliko just because of simu. School fees pia ni simu. Juu saa hii account ya shule. Kama mimi watoto wangu walikuwa nasoma ushago. Tunaweka kwa account direct. Hatuendi na fee yangu imefika. Hata watoto wako wanafukuzwa na tunalipa tu na school fees na simu.
Haya, kwa majina naitwa Penina Wahu kutoka LD, but nakaa hapa Kawangware, ndio nimeka biashara ya salon hapa Kawangware. Kenye naona inanisaidia na hii biashara yangu ni mambo na chama za wamama. Chama za wamama zinasaidia sana sana. Kama umelemewa na business, wanakuja wanakuinua. Kwa saa hizi mimi niko na chama 4. Mimi nimeona hizo chama zimenisaidia juu kama hii ya utugi, naendanga kutembelea wazazi. Kupitia hizi chama za wamama tumeungana. Mtu akiwa na jambo, kama umelemewa, kama uko na ugonjwa, wanakuja wanakutembelea. Hapo awali nilikuwa na circle, but nikakuja nikaona afadhali nikuwe tu kwa hizi chama za wamama kuliko circle. But nikaona chama za wamama zinasaidia juu nikitaka kitu emergency, naenda tu kwa chama nawaambia, alafu kama ni kitu kunisaidia kama pesa kidogo tu ya kuinua biashara yangu wananipatia. Hata kama sijaweka stock ya kutosha kwa kazi yangu, lakini natarajia nitaweka ya kutosha kupitia hizo chama. Tena na wakopa kidogo kidogo na kuja naendelesha biashara yangu. Kuna watoto 2, mmoja ako class 7 na mwingine ako class 1. Na kupitia hizo chama za wamama, at least sijaiona mtoto wangu amefukuzwa. Mi kulingana na kwenye chama zimenipeleka na kwenye zimenifikisha, mi sioni maana ya bank ama circle. Mi nategemea, naona tu afadhali tu nikae na hizi chama za wamama. Juu kwa bank tuweka pesa, umeweka, lakini at last maybe kama unataka loan itabidi ufuate procedure kubwa. Sasa mi sioni kama naweza fungua any circle. Acha niendelee tu na chama za wamama.
My name is Kevin Mulwa. I sell suits in town. We've been in this business for the last 10 years, much experience, challenges here and there. There has been challenges like you Save with the bank, then when you go for loan, maybe to boost your business, you think you get, they want so much. I had another bank which I used to operate here in town. They add so much hidden charges, where you find when you are getting your statement, you get they have charged you so much. Hence, when you go back there and you ask, they have no answers. You are taken from one manager to the other. You are told, come tomorrow, we'll sort you out. And it was very frustrating. Most of the banks we get, you'll find people who are employed there, like they don't have information. Maybe they have the information, but they are not willing to give out the right information because they want to sell first. They want you to open an account with them, and they have been given targets. So the information which they give you, they'll give you information which will make you open the account. Basically, we need to get the right information right from the start when you are opening the account, so that you get to know where maybe there are some deduction of your money at the end of any transaction.
Majina yangu naitwa Nancy Wanja. Mimi ni mwanabiashara wa Githurai. Mimi ni muuzaji wa minji in wholesale na retail. Kuna challenges zile zinapatanga watu kwa biashara. Sometimes unakuta biashara imeenda chini. Saa nyingine unakuta biashara inaenda juu. Kwa hivyo wakati biashara ziko chini, ndio tunahitaji mikopo ya hapa na pale, tunaenda kukopa hapa na pale, unakopa on daily basis. Mimi nikilinganisha pesa ya banki ama ya sako. Kwa sako interest ya sako ni kidogo sana. Lakini kwa bank unakuta saa hii wamekupatia a loan of 100,000, lakini unakuta umelipa kama 300,000. Lakini kwa sako haikuangi na faida kubwa sana. Kwa hivyo na prefer sako instead of bank. Sababu nikienda kwa bank, kila mtu atakuwa anajua mpaka nitaitishwa maseginitors wa kunisainia, lakini ya talama ya Mshwari haitisi seginitary, haitisi mambo mingi. Kwa hivyo mimi naenda tu na nikukanyakanya tu kwa simu, alafu pesa inaingia. Kwa hivyo tumefurahia sana mambo ya Tara, mambo ya Mshwari, KMBC. Those are the quick means of mikopo ile tunapenda sana.
My name is Edith Onyango. I'm a managing partner in a catering business that is owned by two ladies. With regards to financial services, we have two bank accounts. Since this is a partnership, we both jointly have to sign in order to access services. Yeah, so either way, we still have to use the traditional method, going to the bank to actually get cash. With regards to payments, we're able to accept M-Pesa payments. So for this course, we realized that we're able to get a lot more money because people don't always have carry cash around with them. And over the time, I don't have to go to the ATM at all. I even have an ATM card that I will only use because it's a Visa, I use to pay bills. I don't really use it to access money. When I need to get money, I will just go onto the line, I'll use my phone to go into the online mobile app and access money. And this definitely makes things easy. And so far, the individual clients also pay us using mobile money, so still very good. The bigger clients, of course, will pay by bank transfers or by check, so that means those have to go into the bank account. Yeah, I think the banks need to be more friendly or come up with something that, because for us being a partnership, when I need to get money, I still have to physically go into a bank because I have to walk in with a check that is signed by both signatories. We cannot have an ATM card because this is a partnership. So I think the banks should consider doing something. I think mobile banking has helped increase in terms of volumes, because sometimes the people who, when they walk in here, the first thing they will ask is, do you have a till? So in that case, there are people who will comfortably come in because they know that they can pay by M-Pesa even if they don't have cash. Because as it is right now, there's so many requirements and so many small prints that banks require before they can actually give you even the minimum of loan, regardless of the fact that you have lots of money with them. So getting an overdraft facility is close to impossible. So I hope that this initiative is going to help them understand our needs so that they come up with a product that will help.
Naitwa Paul Suyanga na niko na miaka 29. Niko na watoto wawili, mmoja shule, mwingine bado hajaingia shule. Mimi na savingi na natumiaga Equity, lakini sijapata pesa ya kusave. Ningependa kuanzia biashara, lakini sasa ndio naanza kujipanga nipate pesa ya kuanzia biashara. Mwaka uliopita singeweza kusave ama kujipanga kwa vile niligonjeka, na ikawa matumizi yangu yote yameingia kwa gharama ya hospitali. So ile pesa nilikuwa nimeweka yote ilitumika. Kwa hivyo saa zingine life inakuwa ngumu. Kama uko na familia, ukigonjeka, unaweza tumia pesa vile ukuwa umejipanga. Yeah. Lakini kulingana na vile umejipanga, naona itarecover tu. Nitarudisha ile mali nilipea ama ile pesa niliyotumia. Kufanya kwa kusave na kwa kuweka kwa bank, nipate kuanzia biashara. Sijaitumia Tala M-Shwari kwa sababu wanapatiana loan kidogo, mkopo wa chini sana, ambaye haiwezi anzia biashara yoyote. Sijaipata kuchukua loan kwa banki yoyote ile ama kwa Equity kwa sababu ya inahitaji mtu ambaye ana save ama anapata pesa kila mwisho wa mwezi. So sijawahi fikiria kusave na kuchukua loans.
My name is Boniface Kithara Kimathi. Okay, I'm an entrepreneur at Kangemi Business Center where I have a cyber cafe. To start my business, I started with my own capital, and towards growing the business, I decided to take some loans from Tala, from KCB M-Pesa, after which it wasn't enough. I decided to partner with a savings circle that I had been since 3 months ago, where I took a loan of 80,000 and added up to my capital so that I could rent a house where it's strategically accessible by my customers. These loans, first of all, the one I took from Tala, I borrowed from KCB M-Pesa so that I can pay it because the period was almost. Actually, I like betting a lot. I love football, and I like placing my bet, even though I don't know the results which will come after. The little profit that I make, I take at least even 50 bob, which I take it to SportPesa, and at least see if I can get some casual money to juggle in between my other responsibilities. For the medium loan givers, they should reduce how they pressure a client to pay that money. Sometimes business is bad and you cannot be sure that you'll pay within that 1 month. Banks give the loans, but the process of processing the loan is like too much. The processing of the loan is too much. You have to be told to bring how many guarantors, and the interest rate, I find it so high than SACCOs and these other small scale loan givers.
The role of FSD Kenya for HSNP was that of a payment service manager, and that included, to start with, the design of the payment solution. So both in the first phase and the second phase of HSNP, FSD was the one designing the payment solution.
The role of FSD in developing a solution for HSNP began with what I would call a challenge from DFID, where they asked us to place $20 in the pocket of a person in Turkana on a regular basis every 2 months, and to make it affordable. What we did was we set up what today is known as agency banking. At that time, there was no agency banking in Kenya, but with a special dispensation from the Central Bank of Kenya, we were able to set up an agent in Turkana, in Kakuma, and we registered about 500 initially beneficiaries using biometrics, because we wanted to make sure that we were able to positively identify and authenticate the individuals or beneficiaries who are receiving these funds. And also we wanted to make sure that this was a process that could be used by people who are not literate. We then went out and advertised for a payment service provider, somebody to come in and help us to roll out the solution. And out of, about 18 applications, Equity Bank emerged as the best candidate. So we're looking for a partner who was really keen to work with the bottom of the pyramid and to continue to develop solutions for the people of Northern Kenya.
In terms of payment processing, FSD Kenya was responsible for just making sure that the payroll was in order, coming from government, and making sure that the funds that were coming from FCDO and also from government in the second phase were processed in good time and delivered in good time. There was also another role around SLA management, that is the service level agreement. These are agreements that were part of the contract, and FSD's role was to ensure that these had been maintained by the payment service provider, both from a beneficiary point of view and in delivery of the payment. One of the things that we did was to do a beneficiary satisfaction survey, basically going out to beneficiaries and asking, are you satisfied with the service that you're receiving? From the payment service provider side, we were to ensure that the payments were delivered in good time, accounts were opened in good time, cards were delivered also within the framework that we had agreed on. Some of the key design principles that we took into consideration, especially in the design of HSNP, were one, predictability and timeliness of payments. In a program such as a cash transfer program, it's important that you get the payments out on time. So in the case of HSNP, we were able to pay on the 5th of every payment month. Another key design principle, I'd say, is keeping personal data of the customer, private, especially in the age of internet, where some of this personal data can be misused for fraud or other things. It's important that you ensure that this is covered. The other thing is accessibility, ensuring that beneficiaries are not walking long distances to get to a payment point was key for us. There was an SLA requirement around making sure that 80% of beneficiaries lived within 20 kilometers of a payment point, which was adhered to.
Hawa mama wakifika, ako na ATM card na kitambulisho. Kwa hizi zote mbili unahakikisha majina yenye yako kwa kitambulisho na yale yenye yako kwenye kadi ya ATM zinafanana. Kisha utachukua kadi uingize kwenye mashine. Ukishaweka itakuitisha kidole. Utachukua kidole chake uegeze kwenye mashine. Kisha ita-verify. Kisha verify utaweka pesa. Ni shilingi 5,400. Kisha toka utamlipa pesa. Kisha tuko na kitabu ya benki, unaandika maandishi. Utaandika majina yake, ile pesa amepata na kuna na hiyo transaction.
Pesa ikikuja, agent inapiga simu. Wanasema wenye wanapatanga pesa ya Lopetuni wanatakana wapate pesa tarehe fulani. Chief kwanza ndio anatangulia. Nasema pesa ya Lopetuni imekuja, itapatikana tarehe fulani. Agent anasema msanya watu wote wakuje tarehe fulani wapate pesa. Nilikuwa napokea 4,000 sijui na 100 ngapi. Alafu wakarudi tena wakaongeza. Saa hii tunapokea 5,400.
Some of the challenges in implementation of the HSNP program is about the IDs, and we saw this when we were opening bank accounts in the second phase. Once we set out to open the bank accounts, we realized about 40% of the beneficiaries did not have IDs, and that sort of set us back in terms of our work plan and in opening those accounts. One other challenge is about getting viable agents at the time when we were starting, because the businesses were quite small, and depending on the amount of money they were paying out, then that could be a challenge. So that was an issue. But currently we have about over 500 agents across the 4 counties that are serving beneficiaries.
The program has had very positive impacts. Each time there's a drought, the household lose assets and poverty increases in those households, because now you've lost your sources of income, livelihood. In the households where we have this program going on, the poverty did not increase as much as it did in the other households that were not benefiting. Regardless of whatever was happening, the shocks and all this, at least they could eat. They could have something to eat because they had cash, they knew the cash was coming, it was predictable.
We have seen economic impact to our vulnerable households. The money that the household gets can utilize from other things. The household can buy foodstuffs. The household can purchase medical supplies for ill household members. The household can venture into small-scale businesses. And that has brought a shift from dependent population to what I may call resilient.
Hii pesa nimefungulia naye kibanda. Nimeweka mabasta, nimeweka unga, nimeweka nini, kila kitu tu iko, hata peremende. Hii pesa inasaidianga saa zingine natuma kwa shule. Saa zingine kama maneno ya shule ijokuja nanunulia vitu naweka kwa duka.
Evidence shows us that providing cash is actually between 2 to 7 times more efficient than providing food assistance or food aid, which was one of the key objectives of the program at the very beginning. Cash transfers have also been shown to have wider impacts, including on supporting the local economy and supporting the local markets and small traders within the communities that are affected. Use of cash has been shown to preserve dignity of the individuals or the beneficiaries, and has been also shown to have a very positive effect on their mental well-being during a crisis.
Mimi, huu mradi umenisaidia sana. Kuna ile commission mimi napewa baada ya kulipa hawa mama kila tarehe 6 nikienda kule benki, na nashukuru Mungu kwa sababu imeniinua. Pia imefanya biashara yangu imeimarika, kwa sababu wakati nilianza kama ka kiosk kadogo, kati ya watu wanapata pesa they buy. Wamefanya sasa niko saizi na duka 2. Pia imenisaidia kwa sasa ninauza retail wholesale kutoka kwa kioski na kupima sukari ya shilingi 10. Saizi naweza pima gunia, niuze nusu gunia, niuze quarter ya gunia.
Since phase 1 of cash transfer program, a lot of lessons have been learned. There would be need to complement cash transfers with capacity building. Cash payments are not sufficient to transform people. They solve instant problems, but if we did capacity building, then we could put the beneficiaries on a path of self-sustainability.
So in terms of lessons learned is having the community support the project, because initially when we went into northern Kenya, there was a lot of resistance initially to the program. So we brought in, I would call them local elders, etc., to talk to the communities. And once they spoke to them and we got their support, that changed the perception of HSNP.
Sustainability was a key success for us. The original intention was that once FSD exits the program, that the program will continue running. And this has been the case after 2 phases of running or implementing, being part of the project as a payment service provider. We transitioned successfully to National Drought Management Authority, which is now the program or the agency that is running the program, and it's doing so successfully.
Namwambia hii watu asante sana 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 sana. Mwambia hao asante sana. Kama wako na uwezo ya kusaidia tu tena aongezee sisi pesa, aongezee.
My name is Caroline Gina. I'm an entrepreneur. I run a cleaning company called Miss.
Welcome back after lunch. Would like to go to the last session of the day, where we are listening to guest lecture from Mr. Al Assad. And I would like to invite our director, Professor Robert Mudida, to take us through the next phase of the session. So Director, welcome.
Thank you so much, Sam. So good afternoon, ladies and gentlemen. You all look so excited and vibrant. I think the conference seems to have really energized all of us. We were just discussing how insightful it's been. Yeah, so wonderful. Great to be here, and it gives me great pleasure to introduce Dr. Assad Alam from the World Bank. Dr. Alam, are you there? Are you able to hear me?
Yes, I can hear you.
Okay.
I can see you also.
Wonderful,
Thanks, Professor.
wonderful, Dr. Alam. So Dr. Alam is the Regional Director for Eastern and Southern Africa for a department of the World Bank called Equitable Growth, Finance and Institutions. Three very, very powerful concepts, which is part of the Vice Presidency of the World Bank. He's responsible for the design, development and delivery of this particular unit's country-focused programs in 25 countries in Eastern and Southern Africa. So basically very, very, those are virtually half the countries in Africa. So very, very broad mandate. He has a very, very rich background and experience and very, very profound sort of research exposure and publications. He previously served as Chief of Staff to the President of the World Bank Group, and earlier he served as the Country Director for Egypt, Yemen, and Djibouti, and also Country Director for Southern Africa, Country Director for the Southern Caucasus, Sector Manager in Eastern Europe and Central Asia, and Country Economist in various countries. So profound experience and insights from many different countries and from many different continents across the world. His research work is also very profound and broad, and focuses on the areas of growth, productivity, governance, poverty, inequality, trade, and fiscal issues. And as you're aware, and as we've seen from the conference in the past 3 days, these areas are very linked to issues of financial inclusion. In fact, we've been discussing that nexus a lot in the last few days. Just to mention some publications, notable publications of Dr. Alam. He has a publication entitled Institutional Reform in South Africa. Another one entitled Fighting Corruption in Public Services, Chronicles of Georgia's Reforms. Another one in the productivity arena entitled Unleashing Prosperity, Productivity Growth in Eastern Europe and the former Soviet Union. And also other seminal works that he's done are the New Trade Theory and its relevance to developing countries, and also a much cited work that he did around the turn of the century called A Decade of Fiscal Transition. So you can see as very, very broad research output, very diverse and very linked to issues of financial inclusion. In terms of academic background, Dr. Alam holds a doctorate in economics from Columbia University. And Dr. Alam, you're most welcome. It's a really great privilege for us to have you. We really thank you for making the time to grace our conference here. And the participants are really looking forward to the insights that you're going to share with them. Thank you very much, and most welcome.
Thanks. Thank you very much, Professor, for your kind introduction. So I'm actually, the best way to describe myself that I like to do is that I'm a student of development. So I've been in the field of development for 30 odd years, but I'm still learning. And I was actually tuning into your conference a few minutes earlier and to listen to all these wonderful stories from beneficiaries who are actually at the forefront of financial inclusion. It's absolutely amazing to hear the stories. And of course, Kenya is a leader in many aspects of financial inclusion. So if it's all right with you, Professor, I had a few slides I wanted to share, and then and hopefully the technology will help me since I'm working from home early in the morning today. So I see my colleagues have already put up the slide, which is very good, and I'll ask them to move the slide as we go along. So can we move to the next slide, please? So I actually thought I'd share some thoughts on the frontiers of financial inclusion. You all who have been at this conference for the last 2 days, I know you have discussed a lot of very important issues, and you are all among the converts to the world of financial inclusion. And what I believe is that over the last 2.5 years, the multiplicity of shocks that we have all seen, that the world has faced, that all the African countries have faced, in some ways that has elevated the importance of financial inclusion. And if we were to reimagine the world going forward, then financial inclusion has to be at the center of it. And I'll talk a little bit more about that. So I think my first message I wanted to leave with you is that financial inclusion is really a transformational agenda for the world in the light of everything that we have been going through, continue to go through. The second, and I'm sure your discussions over the last 2 days, you have talked about also the challenge of, can you please keep the same slide, please, on the messages. You have also talked about innovation and the digital aspects of financial inclusion. When I was growing up in India, financial inclusion meant that the postman would come to your door and, and start a small postal savings account, and my mother would put some money in it, and that money would accumulate. But now we live in a world of digital and solutions, and a lot can be done in the aspects of payments and savings, credit and insurance. I wanted to talk a little bit about digital because that is absolutely transformational, not only in the financial inclusion space, but in so many other spaces of development that I work on, that we all work on. And my final message is the importance of integrating all the different dimensions, functionalities, that is in the space of financial inclusion for maximizing the impact on growth, on creating jobs, and on reducing poverty and inequality, which is really what we are all after. So all of these things are instruments to achieve the goals of improving the lives of people in all of our countries. Next slide, please. So talking a little bit about financial inclusion and its importance in supporting resilience in the face of shocks. And these are very intuitive things, and we have all seen that in the pandemic, and you have seen that in Kenya, but in so many other countries where the digital infrastructure that we, the digital infrastructure and the payment system has really enabled government services to continue. It has enabled financial payments to be made. But more importantly, it has enabled the government to scale up the support to people in dire need as economies were closed. You know, the cash transfer programs, whether it is in South Africa or in other countries where cash transfers were scaled up in big time, or whether it was for people just to make online payments in order to procure the goods and services they needed, even as the economies and mobility was limited. So in many countries, of course, digital solutions have enabled schools to stay open and for teaching to continue for those who had access, of course, to these services. So I think COVID and the pandemic has taught us the importance of connectivity. But then so also when we talk about the food security challenges in many parts of the world, and I think in the Horn of Africa, of course, that has been a huge challenge. And we are finding that solutions such as e-vouchers, and again, this is something that Kenya has been a leader on the continent in e-vouchers that farmers are now able to use to procure seeds and fertilizers. And it is also expanding now to countries like Zambia and Tanzania and Malawi and other countries where e-vouchers are really transforming the way government programs are delivering services to farmers. But then also with climate change more generally, where smallholder farmers, for instance, in Mali can use index insurance to cope with severe storms and other places. So these are all interconnected challenges where financial inclusion systems are enabling governments to be responsive to people, for people to benefit from and maintain their services and to be able to be resilient to some of these shocks. Next slide, please. So, so coming from that, I wanted to present to you a very simple framework for thinking about financial inclusion, and all of you are experts, and there are many frameworks out there. But I thought, you know, at the end of the day, of course, financial inclusion is all about services such as payments, savings, credit, and insurance that impacts upon people, upon firms, and upon farms. But these services don't exist in a vacuum, of course. They need to have the basic digital public infrastructure, and they need to have the legal and regulatory frameworks. This is, you know, the ecosystem in some ways for financial inclusion is quite challenging to develop, and many countries are still, you know, on a path of on a journey to try to improve these systems. In many countries, you know, if you don't have power, for instance, you can't have connectivity. So in some ways, you know, having access to power and reliable power is the foundation for even, you know, having connectivity and supporting digital financial inclusion. But then so also are all the other concerns that we have in terms of, you know, data security, of data protection, consumer protection, and various other things. So the whole legal regulatory framework, which is something that governments work on, which is what the public good that they provide in order for, you know, for financial inclusion systems to operate. So I wanted to leave this a simple framework as you think of, as we talk a little bit more in this presentation about financial inclusion. What this framework also, of course, embeds is the partnership between the public sector, i.e. the government, and the private sector, because there are some things that are better done and provided, for instance, the legal and regulatory framework that has to come from the government and public entities, whereas, of course, some of the other things, you know, are that we would want the private sector to be much more actively involved in this. So this partnership is absolutely essential in order to make this whole. Next slide, please. I just wanted to spend maybe 30 seconds on talking about how technology has been reshaping our lives and, of course, reshaping financial inclusion. And we have all lived, some of us have lived longer than others in the room, I'm sure. And maybe I have lived longer than many of you. But over the years, there have been so many different technological evolutions, and they've had massive impact on financial services in general. From the growth of credit cards and messaging services to ATMs. I remember when ATMs were first introduced, it was quite exciting. But now we are all in this whole world of digital banking, and we don't even have a full comprehension of what the future actually beholds for us, with all the technological improvements when it comes to artificial intelligence and machine learning and big data and open banking and technology. So technology has been changing very rapidly. We all know that. Internet has been one of the most transformational things of the 20th century, and and the Internet of Things is reshaping our lives. But it enables us to reimagine development, reimagine how countries can progress, how growth and development can take place, how we can leapfrog the space of development in ways that were unimagined when, in the early years, in the post-independence era, when many of the countries in Africa, including my country in India, became independent. The way that development has been progressing and how services are being provided to people, was unimaginable in those early days. But we live in this world of exciting opportunity that technology provides, with many of the risks also, of course, in terms of inequality, in terms of data security issues, and those are some of the challenges we'll talk a little bit, along the way. Next slide, please. So I wanted to focus on a couple of major technological changes, which I think are going to shape the future, already shaping it in many countries. And one is the whole notion of digital stacks, where you have a combination of common standards, open interfaces, data interoperability, and various functionalities that actually come together. And for me, the most fascinating experience has really been from India, where some of you may have heard of how the government of India, has been trying to bring together the opening of bank accounts with the unique ID system, the Aadhaar, the largest ID system in the world, where 1.1 or 1.2 billion people now have the ID card, and moving on to connecting it to mobile services. So the J stands in Indian language in Hindi for Jan Dhan, which is people's money. So it's people's money, the Aadhaar, which is the ID system, and mobile. And that is absolutely transforming the way businesses are done, that people actually live their day-to-day lives in India. But then we also have examples from other parts of the world, and I have an example on the slide, which is from Colombia, where also the Ingreso Solidario, the new social assistance program in response to COVID-19, has been using a similar type of an approach. The different countries are at different stages of how they integrate the functionality and the different systems, but the potential for reach of this, the fact that ID systems, unique ID systems, can absolutely unlock the space for financial inclusion is absolutely remarkable. Next slide, please. The second big digital innovation in some ways that I wanted to share is really the whole thing on fast payments and open banking. And there are many examples, and I'm sure there are things going on in Kenya also that you are better aware of. But I wanted to just put the example of Brazil's Pix, which was developed by the Brazilian Central Bank, which embedded multiple functionalities for users and has transformed the retail payments from cash to digital. More than 100 million people have been using this, and this has all grown at a very rapid pace. And globally, the whole issue of open banking now has is taking shape, and it is absolutely fundamentally transforming the way banking is being done. In some countries, it is the approach is being driven rather through regulations, especially in the more advanced countries, but even in some of the emerging market countries. But then in others like Singapore and Japan, it is being driven in a much more collaborative approach. And while in the USA and New Zealand, open banking is being driven by industries. So this is again something that can transform things. So I wanted to actually focus on four different areas of the framework that I presented earlier in terms of how financial inclusion connects with people, firms, and farms. The first is on payments. And Kenya is, of course, a leader on the payments domain with the M-Pesa and the P2P transfers that were introduced, I guess, more than 10 years ago. And I'm sure many of you are constant users of that. But some of the areas that we feel that even in this post-COVID world that we are living in now, that is very transformative is how e-remittances have now taken off. COVID actually brought a halt to remittances, the normal flow of remittances. I've had long conversations on this, for instance, with the governor of the Central Bank of Somalia, which is heavily dependent on remittances. And it posed a huge challenge in the initial days. But then people started using e-remittances a lot more, and many of these remittances that used to go through informal channels started coming through regular banking channels. There are countries, of course, that have structured it in a very deliberate manner. For example, Malaysia, which actually opened up the end-to-end digital financial services targeting immigrants, and thousands of immigrants were registered. The other big change coming in that space is really on reducing the cost of remittances. And there are many factors that account for the cost of remittances, including the high fees that some banks might be charging for remittances. But the advantage of and remittances through digital services, of course, is that it reduces a lot of these middle charges and the brokerage fees, and has reduced the cost of these remittances, which means that the beneficiaries get more of remittances. People payments, huge examples from and other places, and we all know that that is much more common across the continent of Africa also. I already mentioned the P2P on Kenya, but then we also have the approaches towards embedded finance that digital payments are actually facilitating, where women-led SMEs in a host of countries around the world in different continents are able to access e-commerce platforms, hands-on coaching to connect with financial services, and use digital payments. And this is absolutely, fascinating to follow some of the advances in these areas and what the frontier beholds for us, because this is absolutely critical to reduce some of the gender imbalances in financial services that I'm sure you must have discussed over the last 2 days. And finally, on how digital payments are enabling business platforms to take shape, where you could, and the example I have is from India, where Echo has leveraged APIs to integrate agent management systems, to bill payments and money transfer systems, etc. I use one of these platforms myself from India to make electricity and telephone payments for my family back home in India. The second area of this interface between financial inclusion and people on the service space that I wanted to touch upon is really the importance of savings, pensions, and investments. So, I used to live in South Africa, and I think Prof mentioned in his introduction, I used to live in South Africa, and we did a lot of work on townships, and many of you, many African countries, including Kenya, of course, have the issue of informal settlements in urban areas. And one of the things that really amazed me in townships is how people had come together to develop informal savings accounts through a system, a traditional system in South Africa called Stockwells, or basically, I guess these are savings clubs, and I'm sure you also have some version of that in your own country. And that became a lifeline for many people, even during COVID, but even before COVID, even in normal times, for them to provide microfinance liquidity in an informal manner for people to to seek opportunities and promote economic access to income opportunities. But the challenge for us as a development student, as a practitioner, the challenge for us is that how can we actually build upon some of those models and use digital solutions to formalize those savings, bring them into the banking system, into the formal system, so that they can have more impact and can be better structured. Uganda is one case, and there are many other cases where savings solutions are being promoted very actively. Digital pensions is a huge area for growth, and again, both for the formal but also for the informal systems. And there are innovations underway for how pensions can also be provided for informal segments of the population. And we know for many of our countries, informal economy is a huge one. And also of how investments can be done. Of course, we have very good examples from the more advanced parts of the world on investments through mobile payments, and Africa still has to catch up on some of these things. But these are all, in some ways, the frontiers for how financial inclusion can promote investments to help create jobs and economic opportunity. Next slide, please. The third area is really that the interface that I wanted to talk about is really on credit and MSME financing. And here there are various examples for how this can be done. And for me, it has been fascinating, when you talk about development on how one actually can move from informal economy to more formal and more productive parts, structures of the economy. The example from South Africa has been very striking also, where a lot of the credit that households at least use upon are really stored credits. But now financial inclusion and digital solution actually provides opportunity for using alternative data sets to help build credit history. In Kenya, I know that there have been efforts to also see how psychometric techniques can actually look and enable people who come without any collateral, who may not have ID systems, etc., can help. We have had huge success in Ethiopia using psychometric techniques, particularly for women who want to perhaps access credit for the first time from the formal system. So this formalization of credit, opening up opportunities for women, and using alternative data is opening up new markets and is opening up new opportunities. And I think this is a game changer in how some of these alternative data, including big data, can actually play in that space. Data platforms and credit invoices, I talked about it in different contexts also, but also in the context of credit and MSE financing. There are many examples from Latin America, and I have an example here from Argentina of how MSMEs have been are able to get access to market intelligence tools, various financial information on these platforms, and has led to huge growth on an annual basis of electronic credit invoices negotiated in the market. And there are many different examples of that I'm sure you are familiar with, or we can discuss later. Digital credit, and there's a whole scope of world that is opening up in that space. And even in unexpected places like Myanmar. For me, it was a surprise when we were preparing this presentation for this event that I learned that even Myanmar is in some ways a leader in this field of digital credit, and where farmers, particularly focused on farmers, where fascinating ways of linking up mobile phone numbers and weather-based agricultural intelligence services, and on a digital platform that provides for credit scoring, etc., all comes together in order to provide farming services, credit to farmers. And the final area of this interface is really on insurance. And insurance, I think it is an underdeveloped area, at least in many of the emerging markets, and especially on the African continent. And it is something that we believe that has tremendous growth potential. Especially in the interconnected world that we live in. And there are different ways of thinking about it. The examples here are maybe covering travel and ride cover for day-to-day type of needs that people might have, especially the emerging middle classes who are much more conscious of this. But there is insurance products, of course, in other places that also are being developed to protect people, especially farmers and rural communities, from disaster risk and other natural disasters. So let me spend maybe a minute on the policy agenda in how do we make it all happen. So the world that beckons us is there, but how do we actually make it happen in a way that all of our countries, especially countries on the African continent, actually can benefit from it? And there's a huge policy agenda. A lot of it is within the control, within the purview of the government. Competition and contestability is huge. We want to have many players in the market providing services. If not, we'll have all the challenges that monopoly power actually provides. Monopoly power can lead to, in which case costs might be high and service quality over time may not be as much. But it is absolutely important, contestability and competition also critical for innovation. And this is a hugely innovative space. And this is a huge challenge, because many would argue, some of you might argue, that almost by nature, technology has huge returns to scale and might actually facilitate the growth of monopoly power, as we see in the global space with some of the technology providers. And that risks, therefore, in the concentration of wealth and concentration of services in the hands of a few. So it is absolutely important that government policy actually promotes competition and contestability. But so also it's important for market conduct and the promotion of financial literacy. I'm a great believer that for effective systems, we need to have a consumer base that is literate, whether it is in the financial space or whether it is in other different spaces, because an educated customer in many cases is absolutely essential for these market-based solutions to work. And technology can help in mitigating the risks from all of these new products and providers. But how the industry comes together to promote market conduct and how governments actually lay out the regulations and the legislation for that, and how all of us join hands to promote financial literacy becomes absolutely important. The digital financial services, it cannot be treated as if it's a given. It has to be nurtured, it has to be developed, it has to be supported. The role of the private sector in this space is absolutely critical, but so is of course the role of the government in providing the enabling infrastructure and the ecosystem for that. The credit infrastructure it raises also its own challenges in terms of how you ensure that the credit is provided in an equitable manner. Equity is, for me, it's absolutely core to development. We want to have development that is inclusive, and that is why I love the phrase financial inclusion also, because it has to be financial services for all, not only for a few, which unfortunately in many countries, that is the case. And how do you actually provide a credit infrastructure that supports all the whole population? And in that case, some of the alternative data techniques that we talked of I think they are hugely empowering of people. And finally, the big issue of cybersecurity and data protection. This is a huge agenda. And I think even the advanced countries are struggling with it. Of course, the EU has probably some of the toughest regulations on global data protection regulations. But it is something that every country will have to figure that out. And in Africa, I know that this is also a concern of the African Union. And this is something that requires also a lot of collaboration with other countries regionally and globally. But cybersecurity and data protection is absolutely essential to give the trust and the confidence in people to use digital services. So these are areas that I think have to be worked upon, and it requires continued effort and very proactive engagement by all And these are new areas, so no one has a perfect solution for that, but we can learn from each other and from what other countries are doing and develop these things over time. Final slide, please. And that is just to say thank you for listening to me after lunch and before you close for this session. Thank you very much. Over to you, Prof. Happy to take any questions if people have.
Thank you very much, Dr. Alam, for the great presentation. Actually, we seemed to have saved the best for the last. Don't you agree with me? Yeah. And now I think we'll open the floor for any questions, comments that you may have, so that before we close, Dr. Alam can address them. Do we have any microphone at the back? Yes, the first question is here, right in front of me.
Thank you very much, Dr. Alam, for that brilliant presentation. It was very illuminating to have this global perspective, having been so deeply focused on Kenya for the last few days. I mean, it was very inspiring, really, to see the possibilities within digital finance for all these different development needs. I wonder if you could also comment on, in Kenya, we've had, you know, a long-term sort of digital revolution really going on within our financial sector. But the extent to which it's really delivered benefits for lower-income households is still quite limited, despite all the innovation that we've seen and experienced. And I'm wondering what can explain that sort of disconnect. Thank you.
Thank you very much.
We are still